অন করে দিছি আমি সব শুনতেছি যা বলছি। they will understand everything they will understand everything থাক 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 ওকে থ্যাংক ইউ আই লাভ ইউ আম্মা এটা রেখে দাও সমস্যা নেই ভাত রেখে দিও welcome back to late ICT concept. How are you all? Let me know that voice is okay, you guys can hear me. I will go further then. Walaikum assalam. I'm okay. I catch cold but the rest of all is okay. Hey Hans, how are you brother? Hi family. Hey Domino. Ronnie, hello. Bumsy, good morning, good evening. Thank you, Bumsy. Just let me know you guys can hear me. I mean the voice is okay. And I will talk about the this week bias. So and also the daily bias, okay? So just let me know first that you can hear me. I am in delay as well. Yeah, I am in delay. Maybe some delay, okay? Voice is good. Okay, you can hear me. Okay, thank you. Hey, Emmanuel, how are you, brother? How are you all? I can see there are 15 people. Please like me. Okay, like the video. I'm very fine, except the cold. I have catched cold, and it's the feelings is very good. I'm feeling little bit fever, little headache, and lot of tension. So overall, I'm okay. I hope everyone is fine. I hope that. So don't forget to like. Okay, so I can start this stream. The topics is weekly bias. So I'm going to talk about this week bias. All of you know this can. I mean this fair value gap is from monthly chart. This is the monthly fair value gap. Like as soon as you enter good morning, good afternoon, good evening. Okay, thank you Julian. It's good evening over here in Bangladesh. So this is the monthly fair value gap and this is the consequent encroachment. I wanted to see that market actually came to the consequent encroachment, then it has been retraced. This week I would like to see some kind of higher run. Okay, dollar index should go higher. That is my expectation from this week. Now it will go higher from here. You know the narrative. Monday will be some kind of accumulation phase. Then Tuesday it will maybe the manipulation to the lower part. It will take the sell side liquidity. Then it will start to go higher little bit. Then Wednesday little retracement. I will see some expansion. And then Thursday expansion continuation. Okay, so Friday's retrace, I mean the coming back to the range. So this is the Monday. Okay, so I will expect Monday will just accumulate over there. In Tuesday I will see how far it can go to the lower part. Okay, it can go to the consequent encroachment, it can go to the 75%, it can go to the end of this monthly fair value gap. Don't forget this monthly fair value gap, not weekly. Okay, in the meantime I will see this week consequent encroachment. If you remember, this is the weekly week, so I will see the consequent encroachment. If market can retrace from the now from where it will retrace, I don't know. From where it will retrace. Then how do I take entry? How do I know that where when I should take buy? I will talk about that. Okay, just give me sometimes. 11 a.m. Oh, okay, Julian. Good morning, brother. Hey, George. How are you, brother? So I don't know from where it will retrace, but my expectation is this week we will see some kind of higher run. Okay, it will go little bit lower because of the manipulation and accumulation phase. Then Wednesday and Thursday we will see some kind of higher run. That is my expectation. It will happen, I don't know. Maybe it will go through this monthly fair value gap, it will go lower, it can go over there. I mean it can come to the consequent encroachment of this week, it can come over there. I don't know from where it will retrace. Then brother, how do we trade? Nobody knows where price will go. Everyone actually expect where it could go. there is some sign that will tell us that my bias is, I mean my weekly analysis is right or my weekly analysis is wrong. Okay, I'll go to daily chart and I'm just showing you the dollar index. You all of you know why I'm showing dollar index, because this is your barometer. If dollar is going lower, every other market will go higher. If dollar will go higher, every other market will go lower. Sometimes you will see dollar is going lower, every other market is going lower. In that case, you will see the high resistance liquidity run. That means sometimes you take an entry and you will see it is actually going toward your target profit, but so many consolidation, sloppiness, market didn't respect every PDRA. Maybe it should it should retrace to the water block, then it should go higher, but it actually broke all the level lower and it stopped you out, then it started to go higher. Take the buy side liquidity. Okay, when you will expect that, when you will see dollar is actually going higher and all other market is going higher. It can happen, obviously it can happen. When it is happening, you should avoid the trade. When you see dollar is going lower, other market is also going lower, you have to avoid that time, because in that time you will expect high resistance liquidity run. Okay, I hope it's clear, brother. And again, please don't forget to give me the like. It's very important, because if you give me the like, YouTube algorithm tell that okay, this video is, this live is getting likes, so let expand the video to other people, so that new people can come here and they will know about these things. Okay, now everyone asked me, bro, how, where I should start, from where I should start. This is the place where you should start. I will just remove this one, I don't need that level. You know about this level. This is the monthly fair value gap. If you go to the monthly fair value gap, we go this monthly chart one time in 1 month. From 1 month we see if there is anything very important, we mark them. Then all the week, the weekend, we actually come to the weekly chart, not the monthly chart. We start from the weekly chart, then we come to the daily chart, hourly chart, and 15-minute chart until 15-minute chart. Okay, so that actually define our weekly bias. Now this is the, the what daily chart. Okay, in daily chart we can see there is this daily fair value gap. I just let me mark this one. Okay, so it actually came to the consequent encroachment, then it went higher. Okay, so we got the rejection from there, from the consequent encroachment. It can come to the upper level of this daily fair value gap. Now you can ask me, brother, this is not breakaway gap. This is our breakaway gap. Okay, so if this is our breakaway gap, this thing should happen to this breakaway gap. Obviously it should happen from the breakaway gap. Anybody has any confusion? It has taken the sell side liquidity, market structure shift, price came to the upper fair value gap. Just let me mark. Okay, I'm showing you same thing. Okay, don't be confused. I am not changing my commitment or my teaching, or whatever you tell me, I don't change it. I always keep it same. You guys have to understand the way I'm trying to tell you. Okay, if you don't understand the way I'm trying to tell you, then it will be difficult. So this is your first fair value gap, this is your first fair value gap, and this is your breakaway gap. Okay, that is your breakaway gap. Now when price came to the upper fair value gap, it has to take the buy side liquidity. Where was the buy side liquidity? Here was the buy side liquidity. Okay, I'm just showing you how do you find your bias. This is daily chart, don't forget. Okay, I'm expecting market will go higher this week. Why? Because it has come to the monthly fair value gap. It is very strong. Monthly, it is much more stronger than this daily fair value gap or weekly fair value gap if it is from the monthly chart. I'm expecting price will come to the consequent encroachment, then it will start to go higher. Okay, but if I see maybe in Monday, I have seen a candle close below this consequent encroachment. Okay, in Monday the daily candle will close below this consequent encroachment, then I will expect market will come at least to the upper level of this daily fair value gap or the monthly fair value gap low. Okay, and if you see the monthly fair value gap low is the actually the consequent encroachment of the daily fair value gap. how to just a second. Okay, so this is the consequent encroachment. I don't need that one actually. I know how to mark this one now. I will just mark the midline. Okay, so this is the daily fair value gap, and I will remove this too. It can come to the consequent encroachment again because the monthly fair value gap low is and the consequent encroachment are at the same level, so it can come over there. Now, when should we find our trade? In Monday, we know our narrative, how it will trade. It will trade inside the Friday range. This is the Friday range. Don't forget. This is the Friday range. Okay. So if market would like to go lower, it will come back again to the Friday range. So that is narrative, different thing. We are actually doing our weekly analysis. How this week we will see price will go. My expectation is price will go higher. From where it will retrace, I don't know. If it can retrace to the consequent encroachment, if when it will just come to the consequent encroachment, then it will start to go higher. I will expect, okay, then my weekly analysis is good, it is perfect. If I see it break the consequent encroachment, and I mean break means all of you know, body close from the daily chart, break the consequent encroachment, I will expect it will go lower. When it will come to the upper level of the daily fair value gap or the lower part of the monthly fair value gap, I will expect price will go higher from that any of that level. When I will see maybe in Tuesday or Wednesday, market has actually break this monthly fair value gap. Okay, it actually break the monthly fair value gap, body closed below there. Then only then I will expect market is going lower. Where? To this breakaway gap. After breaking the lower part of this monthly fair value gap, I will expect market will go lower. Until then, I am expecting market will go higher. From where it will go higher? It can go higher from the constant encroachment 75%, daily fair value gap high, or the lower part of the monthly fair value gap. It can retrace any of that place. Any of that place. I don't know. Nobody knows from where it will retrace. What will we do until it is going lower? What should we do? Should we take for sell? We will take our sell when we will see body will close below the consequent encroachment. Then we will look for sell until what level? Above the daily fair value gap. Above the daily fair value gap, we will look for sell. Very small place, right? But this is daily chart. Don't forget, this is the daily chart. Now, brother, we don't take our entry to the dollar index. Then why it is important? When you will see it is going lower, you will find buy setup in every other market. Okay, so your limit will be from here to here. Now, I am using my mobile phone, maybe I am using my one monitor. How do I see what is dollar index is doing? How do I know that? You have to just do this type of things. You have to make two tab. Okay, in one tab you have to open the dollar index chart. Another chart, in another tab you have to open, maybe you are actually trading the NASDAQ, so you have to open the NASDAQ chart. Okay, so this is the way you will open, you will notice how dollar index is working. Or you can do one more thing. You can come here, you can plus sign, you see the plus sign, you will add the DXY. So this is the dollar index, but it is difficult because if you go to the lower time frame, maybe you are in 1 minute chart, then to the lower part you will see the 1 minute chart of dollar index. Okay, I have added the mini S&P because I when I trade, then I need to see two market. The mini NASDAQ and the mini S&P. I have to see both of the market. That's why I add mini mini S&P over there. So you can do that way. And if you have both market, both monitor, double monitor or triple monitor, then it is easier for you. Okay, so it's up to you how do you manage this thing, but you have to see what dollar is doing. Okay, you have to see that. So in dollar index chart, we can see like that way. And if I go to the hourly chart, let me just go to the hourly chart. I know the internet is little slow, right? Hey Julie, how are you, brother? Tanvir, hello, brother. So in dollar index chart, the hourly chart, we can see that price has actually came here. It has traded the fair value gap. See, very little, but it has traded this one. So I want to see some kind of lower run. It can go higher. If it would like to go higher, mark this consequent encroachment of this week. It can go until this consequent encroachment or little bit higher to the above level of the monthly fair value gap. So it can go over there, then it can come lower where to this consequent encroachment. Why I am expecting like that way? I'm expecting like that way because Monday range should be inside the Friday range. Okay, so it can just go above, it can come lower, at the end it will close inside the Friday range. That is my expectation. So it can just consolidate, it will consolidate or accumulation phase will happen in Monday. You will understand that right now I'm thinking market will go higher this week. It will go higher from where? Maybe from the consequent encroachment 75%. Okay, just mark the low of the monthly fair value gap and the consequent encroachment of the monthly fair value gap this year 75. Okay, just let me mark the 75 level. So this is the 75. I'll write it down over there. 75%. Right middle. Okay, so that is the 75% of the monthly fair value gap. It can retrace from there or it can retrace from there. When I will be sure that market is going lower, when it will break the monthly fair value gap low, I will see monthly fair value gap low has broken from where? From daily chart. Why I'm seeing daily chart? Because sometimes I tell you look 15-minute chart or hourly chart. If you see a candle has closed below the consequent encroachment from hourly chart or 15-minute chart, then I will decide market will go lower. But here why I am talking about daily chart? Because this gap is from monthly chart. After monthly there is weekly chart, then there is daily chart. If you are watching, if this fair value gap would be from, okay, just let me show. This fair value gap is from the daily, right? Daily chart. So I will see the 15-minute chart because after daily I have two time frame, hourly chart and 15-minute chart. So if I use monthly fair value gap, I will use daily chart because after monthly chart, monthly chart there is weekly. After weekly there is daily. So I need daily break. If this is the daily break, fair value gap, I need 15-minute break. Okay, because between 15-minute and daily there is hourly. So I will take 15-minute. Now if you think this is from 15-minute chart, I will see 1 minute break. If this is from 15-minute chart, I will see 1 minute break. So if you remember, sometimes I mark some breakaway gap from 15-minute chart and then I go to the 1 minute chart. I tell you I don't want to see anybody will close below this consequent encroachment, below this consequent encroachment of the 15-minute fair value gap. But in that time I am in 1 minute chart. Okay guys, I don't know it is confusing or not. If it is confusing, just let me know. I will explain again. Okay. Hey Ronald, how are you, brother? Very important, brother, because every time I really don't remember to talk about everything. So when I remember something, I try to explain that. And you guys actually don't ask me the question. That is the problem. If you don't ask me, then it is very difficult for me to understand. You are getting it or not. Okay, why are you not using the weekly and 4-hour chart? The thing is, brother, I use weekly chart. I use weekly chart. Right now in weekly chart there is nothing. In my opinion, there is nothing except the consequent encroachment of this week. Consequent encroachment is important level from weekly chart. If price can break the this monthly fair value gap, then this candles this week consequent encroachment is important from the weekly chart. Nothing is important here. There is a very small fair value gap over there that is important from daily chart. Actually, if you go to the daily chart, you will see that fair value gap over there. You see this fair value gap, so that is little bit important from the daily chart. Okay, but 4-hour chart, I go 4-hour chart when I'm confused about daily chart. If I don't see anything very important in from daily chart, then I go 4-hour chart. Very rare, brother. You will see to come to the hour, I mean the 4 hour chart, near about 1% time in 1 month. I mean in 1 month maybe one time I will go to 4 hour chart, because I love to make my chart lower, I mean low. Okay, I don't know how to explain that one, but I actually use daily, hourly, 15 minute, 1 minute. If I am confused about hour, I mean the 15-minute chart, I go 5-minute chart. If I am confused about 15, I am getting nothing from 15-minute chart. I waited the morning session, I didn't get anything from 15-minute chart. Now I am in the PM session, still I am not getting anything from 15-minute chart. Then I go 5-minute chart. After that I go 5-minute chart. Otherwise, most of the time you will see I am in 15-minute chart. When I get something very peculiar from 15-minute chart, I am in 1-minute chart. So I try to make my charts smaller. Okay, I mean, what to say, I really don't know what is the word, exact word, but the thing is I love to make it short. Okay, so please let me know, do you guys understand the thing or not, because this is this just let me go over there again. Hey Rahul, how are you, brother? This gap is from monthly chart. Between daily and monthly I have one time frame, that is weekly. So I want to see the daily candle close below the consequent encroachment. Okay, if this is the daily fair value gap, if I am just now analyzing the daily fair value, forget about this one. Okay, just think there is no monthly fair value gap. Now there is daily fair value gap, I am talking about daily fair value gap, consequent encroachment or upper level. Okay, so where, from which time frame I would like to see the candle close? I would like to see from 15-minute chart. If I see any candle has closed below the consequent encroachment from 15-minute chart to this daily fair value gap, then I am expecting market will go lower. Okay, now think this fair value gap is from 15-minute chart. So I will go to the 1-minute chart and I will expect 1-minute candle close below the consequent encroachment. If I see a candle has closed below the consequent encroachment from 15-minute fair value gap, I will expect market will go lower. Okay, I try to make it clear, but trust me, if you don't understand, I will explain it again, but you have to write down something so that I will understand. Okay, you guys are getting it. Okay, otherwise it's difficult, it's really difficult, brother. Just let me know that you guys got the point. Okay, and there is no confusion. Very important for me, because if you are quiet, I'm very quiet. Okay, so that is the thing. So from hourly chart, you know, this is a week, so this is the consequent encroachment of the week, hourly week. It can go above, it will go to this week, I mean hourly week consequent encroachment, then it will go lower until where it will go. Where is my monthly chart? Okay, so there is my monthly chart, I mean the monthly fair value gap. So this is the monthly fair value gap. Let me lock it. Hey Shahid, how are you, brother? Don't you guys listen to me? I mean, my voice is not clear. Why don't you give me the reply? Is it clear or not? Just let me know. You have to write it down over there. Okay, so it can go above to the London, I mean at the London session it can go above. You can see there is a I mean the fair value gap from 15-minute chart. This is the fair value gap. So I would love to see that this is the last fair value gap, right, from this run. If you look at this run, this is the last fair value gap. What is that? That is breakaway gap. Okay, just let me mark it as my breakaway gap. So this is the breakaway gap. What it can do, I would love to see that it is going higher. It will go to the to this breakaway gap. This breakaway gap will hold the price and it will send it back to the lower part. Okay, in the meantime what it can do, it can go above, more above, and it can trade the consequent encroachment of the week hourly chart. It is from hourly chart, but as I have got this fair value gap, okay, this fair value gap from 15-minute chart, now my expectation is it should, this breakaway gap should hold the price. Okay, there is another fair value gap. Look over here, this is another fair value gap. Okay, so just let me show. Now my expectation is it will come here and it will come here. then it will go higher, maybe, I don't know, maybe from 50, I mean the 75%, or maybe it will go over there, then it will come the consequent encroachment, then it will actually reverse. Whatever is happening, I will expect higher run. Now is it perfectly it will work? No, we need to wait until the Sunday opening. Why? At Sunday we can see that market has actually opened over here. Okay, maybe here it has opened at the constant encroachment. Now what will you expect, that market will go over there then it will retrace again? No, you will not, I mean you will not expect that, because market has opened over there, it has already retracing from the constant encroachment, maybe it will retrace from constant encroachment, and Sunday open we got the opening gap over here, then we will use the opening gap for our buy or for our sell. If Monday, I mean the Sunday open is over there, if Sunday has, you see, price has opened to this breakaway gap, okay, maybe somewhere here. I think guys it is clear, I mean no confusion. Okay, Sunday open, I'm talking about Sunday open, this is Friday close. So Sunday open I saw prices over here. So what I will expect, I was expecting price will go above there and then it will come here. Okay, that was my expectation, but price has opened over there. So I will literally, I will expect market will just go lower. Directly it will go lower. Why? Because it should respect the constant encroachment, at least the constant encroachment, or the 75% of the monthly fair value gap or the daily fair value gap. If it all the level fail, then it will come to this breakaway gap from the daily chart. Okay guys, so that is the factor, I mean I don't know. Voice is clear, I know brother, but when I ask you that you guys are getting it or not, I mean my whatever I'm telling you, you have to write down that yeah, everything you are getting, otherwise I don't know. Okay, if you have hourly fair value gap, what time would be confirmation and can you repeat? Okay, sorry, I'm going again Akhtar Zaman, but I'll just reply to Hans again first. So if this hourly chart, okay, just let me go. If this is hourly chart and I saw this hourly fair value gap, if I got this hourly fair value gap, very clean. Okay, let me just mark that one. This is the hourly fair value gap. Hans, this is your answer. Okay, this is hourly fair value gap, don't forget. I'm now going to the 15-minute chart. Now I'm in 15-minute chart, look over here. At 15-minute chart I got another fair value gap. I will just remove the hourly fair value gap, I will mark the 15-minute fair value gap. There is my 15-minute fair value gap. Okay, now there is my 15-minute fair value gap. Whenever I get, I am in hourly chart, most of the time I mark the liquidity from hourly chart. I mean very clean buy side liquidity, very clean sell side liquidity from hourly chart. That is my expectation from hourly chart, that it will give me some kind of liquidity. Okay, that is my expectation from hourly chart. But fair value gap, everything I actually try to look for in 15-minute chart always. If you get a fair value gap in hourly chart, if you get, okay, just if you get a fair value gap from hourly chart, you must get that fair value gap maybe little bit smaller, or maybe two fair value gap, maybe one straight fair value gap, maybe three fair value gap, but you will get fair value gap in 15-minute chart. Must, you will get that. Sometimes, very rare, you saw very clean fair value gap in hourly chart, but when you are in 15-minute chart you will see some kind of sloppiness, so that there is no fair value gap. In that case I actually let market actually how it will trade to that hourly fair value gap, I just let it go. I don't try to frame any trade to that hourly fair value gap in that specific moment. Okay brother, in my opinion I really don't care about hourly fair value gap or something. If I see very clean fair value gap, I try to frame that fair value gap to from the 15-minute chart. From hourly chart, this candle high and this candle low, sorry, this candle low is the fair value gap. So when I come to the 15-minute chart, I can see there this candle high and this candle low is my fair value gap. So it is much more clearer for me. So I really look for the buy side liquidity and the sell side liquidity from hourly chart. Sometimes you will see very clean buy side liquidity. Okay, let me try to find something if I can see. If I can see, okay, if I can see something. Okay, nothing. Okay, look over here. There is the hourly fair value gap. See, this is the hourly fair value gap. This is the last fair value gap. Let me go to the 15-minute chart. Don't forget that is from hourly chart. And it's loading. Let me come to the beginning. I think this is the beginning. Okay. If you come to the 15-minute chart, you will see two fair value gap. And one is over there, one is over there, one is over here. So three fair value gap. But in my opinion, this one shouldn't, I mean this top one is not valid. It's because it is at the level of the liquidity. You see all of this liquidity are at this level. Okay, so all of this liquidity, this high is above this fair value gap. But look before, try to frame your liquidity from so many highs. Okay, so if you just mark, let me, I think I talk about this, I don't know, but if you, so look, all of these highs, they are equal. Okay, this high actually broken, it is fake breakout. At in my opinion, I always look for equal highs, equal lows. So this is my liquidity level. And if you see, this fair value gap is at the liquidity level. So this fair value gap is not my first fair value gap. Where is my first fair value gap? This is my first fair value gap. What is that? That is breakaway gap. What is this one? This one is the uh, fair value gap where you should take your entry. Okay, then now I will just mark two fair value gap over there, one after another. Okay, just this one, I will extend it right. There is extend it right. Okay, I will change the color. I think let me just change the color. I know guys, you are getting just let me change the color. Okay, so this is the first fair value gap. Okay, don't forget. And this is the second fair value gap. That should be the breakaway gap. So I will change it to the green color, the blue color. Now look, it actually came to this fair value gap and it didn't reach to this fair value gap. Later, let me check. Actually, it came back again to that fair value gap or not. Okay, so over here, it came to the breakaway gap. Anybody, do you see anybody has closed above the consequent encroachment of the breakaway gap? I don't see. Now you can see wick has gone over there. I mean, it has closed the breakaway gap. I told you sometimes it actually happened. Sometimes it happened. That's why I love to put my stop loss above the breakaway gap. But the rule is you can put the stop loss above the consequent encroachment. When I put my stop loss above the consequent encroachment, when I see there is some fair value gap that is like this, okay, like this very big breakaway gap, in that case I actually put my stop loss above the consequent encroachment. But if I see this type of a small breakaway gap, I love to put my stop loss above the breakaway gap. Try to understand the concept, brother, because whatever I'm telling, I'm trying to get you clear the thing. Breakaway gap, why I'm putting my stop loss above the breakaway gap, because this is very small breakaway gap. If I see very big breakaway gap, just a second. I'm sorry, I catch cold. If I see this type of big breakaway gap, then only then I put my stop loss above the consequent encroachment. My belief is the wick also won't go above the breakaway gap consequent encroachment. Okay, so this is the thing. I can just remove this one. So the question was from Hans, right? I'll just remove both of them. Okay. I think the question was from Hans. I think it's clear, brother. How do I use the hourly fair value gap? If I find the hourly fair value gap, I go to 15-minute chart and I try to find more clear fair value gap over there. Okay. So just let me go to the over here. Now, what is our expectation? Our expectation is this week market will go higher. How do we it will go, it will accumulate in Monday. Tuesday we will see some kind of manipulation to the low. Wednesday and Thursday we will see some kind of higher run. Friday it will come back again into the range. When it will change my expectation, I mean I will expect that my weekly bias is wrong, I should take sell entry when it will be below this monthly fair value gap low. Okay, below this monthly fair value gap low I want to see the body close from daily candle, not hourly candle, not 15-minute candle, not any other time frame. Just daily candle will close below the monthly fair value gap, then I will expect market will go lower. Now brother, then when we, if I see market is going lower, lower, should we wait until it has closed below the constant, I mean below the monthly fair? No, you are not waiting until then. You know the level, this is first level, this is second level, this is third level, this is fourth level, you know the level. If you see market actually broke this constant encroachment below the constant encroachment from daily chart, okay, you will expect market will come to this level at least. From here to here you will find some kind of short there. When market will come here, you will expect market will go higher. Now will you take your buy over there? If your narrative is telling you, I mean that is just think that is the Wednesday. So in Wednesday, you know, we are expecting expansion. So you saw in Tuesday manipulation has done and price actually came to the 75% of the monthly fair value gap from any time frame. Okay, it has just come here. Then in Wednesday it started to go higher. At the London session maybe it was consolidating or it went little bit lower. Then at the New York session, AM session, you got some kind of buy setup, you will take that buy. Now brother, how long we will hold our trade? Until this constant encroachment or at the 50% of this constant, I mean very little time, I mean very little portion of this range, when I will be sure that market is actually going higher. Okay, when it will break the high of this monthly fair value gap. After trading here, when market will break the monthly fair value gap high, I am going to sure that market will go above again. It will never respect this fair value gap. Okay, so this is the way you will expect something from the market. I will go even in NASDAQ, I mean the NASDAQ. I will, if you guys have the time, then I will go maybe to the Euro USD, gold, whatever you will ask. I will go. Okay, will you put your risk above the breakaway gap in that case, brother? Yeah, I told you that I will put my stop loss above the breakaway gap. If I see the very little breakaway gap, then I will put my stop loss above the breakaway gap. Now will I take entry to that 50-minute chart? No. When I see market has actually come to this breakaway gap, I will go to 1-minute chart and I will start to read the price from there. If I get any setup for sell, I will take that sell, because I know from 15-minute chart it is the breakaway gap and it should hold the price. Okay, if you just, I don't want to go there. I think you remember from the dollar index, when price was in the breakaway gap, I will go to the 1-minute chart, because that was the breakaway gap from 15-minute chart. So I should go to the 1-minute chart. In 1-minute chart, I will expect price should go lower. Why? Because this is the breakaway gap. It should hold the price. I will read the price. Can it break the constant encroachment of the breakaway gap? No, it didn't. Okay, so it actually break. I mean, it gave me a very nice sell entry, sell setup. So I should go for sell. Okay, I think it's clear. Oh man, before I forget, please help us understand the macros and how it used, seasonal tendencies, interest rates, and data. And the thing is, seasonal tendencies, I don't see that. Interest rates, I don't see that. And data, I don't see that. I only read the price. I believe in price. But when there is something is not good, like the war, I mean, right now, you all of you know about the Palestine. So when, or the like COVID-19, if this type of thing happens, I don't take entry. I just avoid that week, maybe that session, maybe that day. I avoid that until market is come down. So I really don't see the seasonal tendencies or this type of things. Okay, I really don't understand that. I don't say that is lie. I really don't understand that. Man, the seasonal tendency, everything, because this is so in so many information. I can't remember them. My brain is not like that, okay? So it's very difficult for me to remember everything. When I'm in front of the chart, I really love to read the price only, because I can see, I can understand what price is telling me. That is the thing I'm trying to teach you as well. I don't know it is helping you or not. And the macros, brother, I have uploaded the videos to the macro folder to my YouTube. There is everything, every single thing, okay, with example. In 1 week, maybe 1 week, every macros example is over there, so you can check them, okay. I hope that will clear your doubt. Thank you, Shahid, for understanding. Okay, we can wait for what, Apu? For what you will wait. NASDAQ weekly chart, left side there is a fair value gap and price respect. CE, bro, please show that place and say something. Left chart, weekly chart, weekly chart. What did you say? NASDAQ week chart, left side there is a fair value gap and price respect CE. I really didn't understand which one you were talking about, brother. I mean, I don't see any fair value gap on my left because I have the information from here. So I really don't understand. So can you please tell me the time exactly which time that fair value gap has created? That will be easier for me. Okay. So this is the weekly chart, and from Nasdaq you can see this is the monthly fair value gap. All of you know about this volume imbalance. So price came to that volume imbalance. See the rejection. How beautifully it has been rejected. Okay. Bear fair value gap. Are you talking about this one? The volume imbalance. Bear fair value gap. For FX pairs. Oh, okay. Thank you. Apo, I don't understand breakaway gap concepts as it like just a fair value gap. Chris, yeah. Oh man, how so? Just okay. Mm, 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 no, sorry. Second. This is a run, right? This is a price run. You can see this is a price run. Price has started to go up. In the meantime, Tanvir, please tell me the time, exactly what time that fair value gap happened, okay, so that I can detect which one you were talking about. Okay, the breakaway gap. What is breakaway gap? Just let me show you one more time. Two, how many? One, two, three, four. One, two, three, four. Okay, so market actually came here to here, then here to here. This is a up run, this is a down run. When you will see a up run, your narrative is telling you that market will go higher. Okay, you will mark the first fair value gap. This is the first fair value gap. Just let me show you style. If anybody understand which thing he is telling, the Tanbir, which thing is telling, let me know. Okay, I really didn't get which fair value gap he would like to understand. So this is the first fair value gap, this is the second fair value gap, and this run has started from here. This is the starting of this run. So if I mark, this is my first fair value gap, this is my second fair value gap. Okay, look from here to here. This one is my first fair value gap, this one is my second fair value gap, this one is my first fair value gap, this one is my second fair value gap. Here the lower one was my first fair value gap, here the upper one is my first fair value gap. Why? When price is going from low to high, the first one is should be the breakaway gap. This is the breakaway gap. when what happened? Oh man. Okay, because I'm in the hard time frame, that's why it went. Okay, so if I go to the daily chart, maybe I will get them. Maybe let me. I don't know. It's maybe because of my internet or something. I don't know. So this is my breakaway gap. Let me write it down over there. Break. Break. So I copy, and this one is my breakaway. So this is the breakaway gap. This is the breakaway gap. When price will go from below to high, the first parallel gap will be the breakaway gap. When price will come high to low, the first parallel gap will be the breakaway gap. Now, how do I expect? How do I expect price will actually use that two fair value gap? I will expect market will come to the upper fair value gap, then it will go up and take some kind of equal highs, the buy side liquidity. Okay, that should be our expectation. Now, if market can break the upper fair value gap, where it can go? It can come to the consequent encroachment of the breakaway gap. Now it can actually go little bit lower of the consequent encroachment, but the thing I really don't want to see is a body will close below the breakaway gap. If you see a body has closed below the breakaway gap, then this breakaway gap is not valid for me. That one I will never use as my breakaway gap. Now this whole thing happened in 15-minute chart. Okay, from 15-minute chart you got this thing. There is something else actually, so actually let me. Okay, so what actually we got here? Thing, okay, like that way. So actually it has taken the sell side liquidity from there. It has been taken the sell side liquidity, then gave you a very nice market structure shift. This is your market structure shift, and then just think, then this is your first fair value gap. After getting the market structure shift, this is your first fair value gap. This will be the breakaway gap. If it didn't take the buy side sell side liquidity first, then if it didn't give you the market structure shift, then this will never be a breakaway gap. Okay, so this is the breakaway gap. This is the simple thing. I mean, every gap is the fair value gap. I explained so many times what is fair value gap. What is fair value gap? I told you every time. Breakaway gap is fair value gap. New day opening gap is fair value gap. Opening gap is fair value gap. Every gap is fair value gap. Now every gap is fair value gap? No, every gap is not fair value gap. I have talked about them. I do not want to waste time to repeat them again. Okay, so I think the thing about the breakaway gap is clear. Who asked the question? I really forgot. Okay, I mean, so many. Okay, Chris, maybe. Yeah, Chris. So how to use the breakaway gap, brother? I'm showing that every day, so you have to join to my live maybe to understand that. Okay, then we not so far 3 to 4 candle ago, number 7 candle. Yes, Monday 18 September candle. Okay, Monday's 18 September candle. Monday's 18. Are you talking about this one? Monday's 18. I think you are talking about this thing. That's too far. I mean, we have done the job over there. Okay, so we actually expected the thing over there. It is done. I mean, it is too far from now. I mean, it's in September. It was happened this fair value gap. Then we have traded every area that was consolidation over there, and we talked about them. Right now, if you think this is the place where it should retrace, I don't think so. It will retrace from the consequent encroachment of this fair value gap. My thinking is it will go little bit higher, maybe to the consequent encroachment of this week. Okay, so maybe it will come back again to the consequent encroachment, then it will retrace. I want to see some kind of liquidity run over there, some kind of liquidity run. but if it failed to take this high, okay, just forget about this high. I really don't want to see that it will take this high. It will take this high. I really don't want to see. I want to see it will take this high. You see this high, it will take that high, the liquidity above that high. If I go to the daily chart, let me go. So you see this high, I really don't want to see it will take that high, but it will go above and it will take some kind of liquidity from there, little bit liquidity from there. Right now price is above, I mean here. I really don't want to see this fair value gap should work right now. Why I don't want to see, I don't want to see that? Because when this one has happened, this fair value gap has happened, it has to balanced. But the way it will balanced, I need some kind of buy run first, right? Some kind of buy run that will, the close will, I mean the candle will close above this fair value gap, because this is sell side inefficiency, by sell side imbalance, buy side inefficiency. So I need some kind of buy side. So when I need buy side, I need a candle will close above this fair value gap. Above this fair value gap, I need a candle close. Now why I don't want to keep this chart to my this fair value gap to my chart? Because right now this chart is not important for me. I mean this fair value gap, not chart. This fair value gap is not important for me. It will be so many things in one chart. Okay, so in daily I see there is an fair value gap above the daily high. Let me talk one by one. I mean if you guys continuously keep me asking question, then I can't tell you the things, I mean the way I do weekly analysis. Okay, so just let me go with my pace. I don't want to see any question. I mean if I ask you the question, then please reply, otherwise please don't ask me the question, please. That is the request. So I will go to the NASDAQ. From dollar index chart, we know our expectation is dollar will go higher. When dollar will go higher, NASDAQ should go lower. Okay, all of this place it should trade all of this area, and finally I am expecting market will come at least to this volume balance. That is my expectation. It will come over here or not, I don't know. Until it is over here, I'm expecting market will keep falling. Okay, this is 1 week, and last week we saw market actually went above. It came to the to this. Okay, just let me remove this one. I think Tanvir, your question is clear, because this is the imbalance. It need to close above this fair value gap first, then it will come back again. It will retrace from the lower part for the consequent encroachment, then it will go lower, take some sell side liquidity, then it will be balanced. Okay, so it is waiting for to be balanced, but we don't need to keep this on, because this high is not important for us. Okay, so that's why I don't need to keep it right now over there. It will retrace from the consequent encroachment, I don't think so, because it has done its job before. It has been retraced from the consequent encroachment. Here nobody has closed above the consequent encroachment, so this is the consequent encroachment retracement. So I don't think so it will be retraced from the consequent encroachment. Now market can do it, yeah, obviously it can do it. I'm not telling you that it can do it, but it can do it. I really don't want to see that. I want to see market will go at least above this buy side liquidity. This is the buy side liquidity, this is the weekly candle. So guys, every candle is important over here. From monthly and weekly candle, it is very important. Okay, so I want to see it will go above that high, but it will not, it is not going to break that high. Why I don't want to see? Why don't you guys ask me the question? You don't ask me the question. Why don't I, why I don't want to see it will break that high? Why I don't want to see? Because if it break that high, then I will see it has taken the sell side liquidity from here, give me the market structure sheet with a very nice, maybe very nice fair value gap or I fair value gap. Okay, I will just remove this one, fair value gap. So that is kind of a bullish thing. Okay, in that case I have to think market will go above that high, maybe that relatively equal highs, and finally it will take that high. Okay, that should happen when I will see that it will go above that high. Now if you see, it is actually relatively equal highs. Okay, this high and this high, they are relatively equal high, very nice buy side liquidity. But if you see above that buy side liquidity, there is no place where price can retrace. It has to take the buy side liquidity, then I will have the consequent encroachment of the bullish order block. This is the bearish order block. I really don't want to see it will take that buy side liquidity now. But can it do it? Obviously it can do it. If I see a dollar is going lower, it will keep going higher. For how long it can go? This is the level. What is important for me? Why this level is still now it is important for me? You see, this is the buy side inefficiency, sell side, buy side imbalance, sell side inefficiency. I got my sell side over there. Now price actually come back again to this fair value gap. It retrace, take the sell side liquidity. Just let me show you. This candle's high, this candle's low. Okay, so what is your consequent encroachment? This is your consequent encroachment. I want to see the retracement from the consequent encroachment. Nobody can close above the consequent encroachment if this weekly fair value gap should be imbalanced. Okay, now you can tell me, last video ICT told that just let me try to find me an example. Just give me a second. Okay, okay, just think like that way. ICT told that this is buy side efficiency, sell side, sorry, buy side imbalance, sell side inefficiency, this gap. Okay, and when I got this candle, that is sell side imbalance, buy side inefficiency, if these two level is at the same place, then it will be the balanced price range. So ICT told that to his last video. I got confused because it shouldn't work like that way, because later price will come back again to that fair value gap, and then the way I described it should be balanced that way. And now from where I learned this, that it will be balanced like that way, it has to reject from the consequent encroachment or to the lower part of the fair value gap. Where did I learn this? I learned it from ICT, from his very old videos. Okay, I learned this from ICTs, and I saw actually that worked every time. Not every time, 90% of the time it works. Okay, so I see price has closed above the consequent encroachment, so it is not balanced yet. If price can go above the relatively equal highs, then come to the lower part of the weekly fair value gap, there is a chance to go above there to make that fair value gap balanced. But I really don't want to see that. That is my expectation. I want to see market will go above this high, take the buy side liquidity, then it will retrace. When I will know it is going higher or lower? After Tuesday I will know. Why? Because until Tuesday it is accumulation and the manipulation phase. In Wednesday we will see the expansion. If I see higher expansion, my expectation will be okay, maybe market is going toward that weekly fair value gap. Guys, that is the way you will understand that your weekly analysis is correct or not. Wednesday you will get the expansion. Okay, no manipulation, it is expansion. It will go, it is coming lower, it is going lower, just it is going lower. It is going higher, it is going higher. Every time? No. 80 to 90% of the time. 10 to 15% time you will see exception. Okay, always, for every concept you will see. Now what I was talking, why ICT told that is the balanced price range in his last video. Okay, if you have already watched his last video, you have already know that. Why did he told that is the balanced? Okay, in his opinion, uh not that one, because there is no fair value gap. But if you see, there is a fair value gap and there is a fair value gap, and both fair value gap is at the same level, he told that is balanced price range. But previously he told that is actually repriced. Okay, balance price has actually repriced the fair value gap. I am agree with him. In his last video, whatever he told, he talked about the market structure, the market maker X model, and in that video he actually indicates something, in my opinion. Okay, that is my opinion, I don't know what he meant, but that is my opinion. He is going to disclose something to his book which he hadn't teach us yet. Okay, that is my thing, my opinion, because I saw his previous explanation when he told us that this is buy side imbalance, sell side inefficiency, this is repriced. When price will come back again to this fair value gap and it will retrace from the lower level or the consequent encroachment and take some kind of sell side liquidity, then it will be balanced. You don't need to keep that fair value gap anymore. And I saw that it worked 90% of the time. But when you will see there is a fair value gap, there is a fair value gap, it is balanced, price will never respect that level. It didn't work like that way. Okay, so I really don't know why he told that in his last video. Maybe I missed something, I really don't know, but I will stay in this concept. Okay. Okay, so thank you for the illustration on the breakaway gap. Thank you. No problem, Chris. So there is no chance the daily Q will rise the equal highs on Tuesday and go down from the fair just above one right, following them basically. Okay, so the thing is, I'm telling you the expectation, brother. I'm not telling there is no chance. It can go. Obviously, it can go. That's why I explained this fair value gap. If it can break this equal highs, then this fair value weekly fair value gap low will be my target. It will go at least until the low, then it will come lower. Overall, I want to see market will go low. That is my expectation. That market will go low. From where it will retrace, we have to see. What is my expectation? My expectation is it will go above this high. I mean this candle's high. It will go above that high, then it will retrace. That is my expectation. Now it can go above this equal highs because this is very clean buy side liquidity, very clean buy side liquidity. Okay, if I see that, then I will go until weekly fair value gap. Now what I will do, I will go every day's narrative. I will go with my narrative for my execution. Okay, I don't need the bias for taking entry. I don't need that. But when I will see why weekly bias is very important. The thing is, if you have an expectation of your bias, okay, now you know market will go higher. That is your expectation. What will be your daily expectation? Monday it will trade inside a range maybe. Tuesday you will expect some kind of lower manipulation because your weekly bias is telling you that this week it will go high. Okay, so you will expect Tuesday manipulation will be below the market. If your just let me reverse it. So if your weekly bias is bearish, you will expect Tuesday manipulation will happen somewhere here above the market, somewhere here. Then in Wednesday, Thursday, I will see the lower run, this weekly bias. Okay, this weekly bias will help you to understand the narrative. If you understand the narrative, you will be confident to take your entry 15-minute chart, from the 1-minute chart. That is why your weekly analysis is important. Now if you are wrong about your weekly analysis, what will you do? If you are wrong, okay, my weekly analysis is telling me it will go higher, so I will expect in Monday it will accumulated, the price will accumulation. Tuesday I will wait to some kind of manipulation to the lower part. If I see higher manipulation, what will I do? I will never expect that it will continuously to go higher in Tuesday. I will expect, okay, maybe my weekly bias is wrong. But it has taken the buy side liquidity though. Now it is manipulation phase, so I am trying to take some kind of short. If I see it has taken the sell side liquidity from Tuesday, from Monday's liquidity, it has taken the sell side liquidity from Monday, I will expect it will go high because my weekly bias is high. So I will be more confident that my bias is right. I am right this time. Okay. So this is the thing, guys. You have to make them dependent, okay, on above another. This is your weekly bias. Why this one is important for your narrative? Why narrative is important uh, for your understanding the price? When you will see it went above the Monday's high or the relatively equal high, you will expect some kind of lower run. If it happens in Tuesday, because Tuesday is the manipulation phase. If you see this is Wednesday, you will expect some kind of expansion. It is going higher. You will never think, okay, it came until here, so now it will go until there. No, you will not expect that. You will expect it came here. This is Wednesday, okay? It came here. Now it is going lower. Okay, maybe it is actually retracing. It will come some kind of fair value gap, or it will take some sell side liquidity, then it will keep going higher. This is the expectation from Wednesday. How do you know about this? Because your narrative, you know the narrative, how Wednesday work, how price work in Wednesday. Now when you will know this, you will go to the 15-minute chart, you will find some kind of fair value gap over here, and sell side liquidity, market structure shift to fair value gap. You got all of them. Market came back again to that upper fair value gap. You go to the 1-minute chart and you will frame your trade to 1-minute chart. Okay, this is the simple way to understand the price, read the price action. That is why everything starts from the weekly analysis. This is your weekly analysis. I am expecting market will go low. From where it will retrace, I don't know. I don't need to know that. I don't need to know that. It can come here, it can retrace from there, it can come here, take the buy side liquidity, and it can come over there, then it can retrace there. What will we do until this run? We will go to the daily chart. Okay, just let me go to the daily chart. I don't know where is the line has gone. Okay, whatever, just let it go. Okay, just let me mark it again. So here to here. Okay, when it is going higher, what will you do? You know, this is your Friday runs, right? This is your Friday runs. In Monday, what should market do? Market should come back again to the Friday runs. Every Monday will work like that way? No, I'm not telling that every Monday, but 90% of the time you will see Monday will trade inside the Friday runs. You saw the last two Monday, right? All of you know, when I started to talk about the narrative, you already know about the Monday narrative. So it worked perfectly. So I'm thinking in Monday I will frame my trade depending on Monday's narrative. Now, as my bias is bearish, I will expect this manipulation will happen in Tuesday. When Tuesday I will see market is going higher. Now think, this is Tuesday, okay? It is going higher. Will I take buy? No, I won't take buy. I will wait from where I will get the retracement. It is going higher, higher, higher. Okay, no problem. I'm not going to take buy. It is going come here. It has come here. Okay, just think. Just let me. It come here. Whole Tuesday it went higher. What will I do? I will do nothing. If I see it has some level, right? This is the buy side liquidity. Above this buy side liquidity, maybe there is a water block. Daily fair value. I'll come over there. I'll just try to make it simple first. I mean clear first. I saw it has actually come to this water block. Okay, just think. This is Tuesday. Remember, guys, this is Tuesday, and I saw when it come to this water block, maybe I'm in 50-minute chart, I can frame a trade over there, sell entry. Okay, I sorry, no, from 1-minute chart I got a sell entry from that specific level, from that order block level. I will take that sell. I will take that sell because this is manipulation date. This is Tuesday, so I will take that sell because I know if Tuesday is the manipulation day and it actually did came here, as my expectation market will go lower, that is my weekly analysis, I am going to take the sell. Will I hold my sell until here? No, I will take a little portion of the run. Little portion, all of you know. I take always the little portion of the run. I take sell. I mean I close my entry somewhere here. Now this is just think, this is Tuesday and price actually came here at the level of this buy side liquidity. Remember, this is the relatively equal highs. This high and this high, they are relatively equal high. So price actually came here. Will I take sell over there? No, I won't take sell because there is a fair value gap. Though there is a fair value gap, but it is at the level of the buy side liquidity. So what it has done, it has made triple highs. It has made triple highs. So there is a more chance price will go and take the buy side liquidity. But if it can take the buy side liquidity, maybe it has come to the daily fair value gap considered endorsement. And after that, what will I do? I will take a sell? No, I will wait until this Friday daily fair value gap low is broken. Low is broken. I will wait until then. From which time frame? From 15-minute time frame. I will wait when I will see 50 from 15-minute time frame. The low has broken from that daily fair value gap. Then I will go 1-minute chart and I will try to take some kind of short entry. It should happen in what to say, the Tuesday, because Tuesday's narrative is telling me this should be the manipulation. Now if I see in Tuesday, maybe it has traded somewhere here, maybe to the low it has taken something, and in Wednesday I see price is over here. Okay, it has taken the buy side liquidity. It come to the consequent encroachment of the daily fair value gap or to the water block. My narrative is telling me market will go lower. Okay, my weekly bias is telling me market will go lower. And try to understand, guys, today this is Wednesday. In Tuesday we got some kind of manipulation over there, maybe it take the high, then it come low again, whatever it has done, just forget about them. But this is Wednesday. Now I see price came here, it has taken very clean buy side liquidity, it come to this order block. What should it do? It should retrace from there, right? It should come lower. No, man, it should not do that. uh, okay, I'll talk them later. It should not do that. Why? Because this is the expansion. It should go higher. It should come, I mean, it will maybe retrace little bit, then it will go higher again. That is Wednesday's narrative. Okay, this is the narrative from Wednesday. So you have to understand the narrative. After the weekly analysis, you have to understand the narrative. So where I was, so many questions, so there is no chance. Okay, for me, so was confused with your balance price too, because the one ICT explained that is what I know as a balance price too. I told that Domino, I think you got the point. I mean, you see this two fair value gap. There is a fair value gap. There is a fair value gap. Last video, in last video, he told that this is balanced price trends. But before he told, when I will see this fair value gap and again this fair value gap, it is actually repriced. It repriced this fair value gap. Okay, then when price will come back again to the upper level of this fair value gap or the consequent encroachment, and it will reject from there, it will take some kind of buy side liquidity, it will be balanced. I will go with that concept. In his last video he told that it is balanced, but I really don't know why he told like that way. In my opinion, I will not go with them, okay, with that, because that is just a video, and that video was about the market maker model. So in my opinion, that is not, he didn't talk about like the thing. He told that mean threshold is the middle of the body, though I know what he meant, but it's not middle of the body, it's the middle of the candle. The mean threshold of the water block is the middle of the candle. So he was actually explaining the market maker model. Okay, so whatever he talked about order block or the balance price trends, we shouldn't take that from there, because the concentration was on the market maker model. So he wasn't concentrate about these things, the perfectly balanced price trends or the water block mean threshold, whatever he talked over there. His main intention was to explain the market maker model. So we shouldn't take that information and try to make some controversy about them. Okay, that is my opinion, brother. Francis, you, I think, I don't know what you see, but uh, if you see, then it's okay, brother. It is easy and clear to me. Go. Okay, thank you. Important with bias or without bias can be traded. Yeah, thank you, Tanvir, for understanding. That is true, brother. Forex pairs, please too. I will go to Forex, brother. But before that, I need to take a break. At least 2 to 3 minute break. I need to call actually, and I need to drink some water. Okay, so I'll just write it down, and I will take 5 minute break. Okay, just give me 5 minute break. Please, I'm very sorry. If you guys would like to do something within this time, please do that. I need to call, and I need to actually drink some water. So I'm coming back. Okay. Is there anyone? I don't think so. uh first, okay. Guys, are you there or not? Okay, let me know that you guys are here. I'm sorry because and it's some kind of problem. I had to take that call, so I'm really sorry for that. Okay, but I was at the daily chat. Okay, yeah, I was at the daily chat. Okay, thank you, brother. Thank you. I mean, the people in this world, they're very selfish. Okay, I have paid all the money they asked for the job, and now they're asking more money. That is very difficult to communicate. I mean, why people do like this type of things? This is not good. Whatever, just let it go. So from weekly chart, I told you that I would like to see it will go above this high and it will come back. I mean, it will come lower. Now, it will happen. I don't know. That is my expectation. I don't want to see that market will go above that high. I don't want to see that. If I see that market actually went above that buy side liquidity, I mean to that daily fair value gap and lastly the water block. If I see that, okay, then I will expect the lower run. But when? If the narrative, I mean, is telling me this is the expansion day, I want to say, I mean, everything will depend on the narrative. to be honest, brother. Everything will depend the narrative. So far I can see it has taken the sell side liquidity. It has given me the market structure shift over there. Just let me show you. This is from the daily chart. Okay, so this is the market structure shift. You will see there is a fair value gap over here. This is a fair value gap, and this is a breakaway gap. Okay, this is a breakaway gap. Is not problem, disrespect is. Yeah, it's true, brother. Performance of core content, but it's still not right. Brother, I told you that I don't I didn't study the core content. It's too much information for me, so I really didn't. Okay, I didn't study the core content. So it has taken the sell side liquidity from there. This is the sell side liquidity has taken from there. Now the thing is, in Monday, if we see price go little higher, it has taken this high. Okay, just think like that. In Monday, I mean today, tomorrow, it came here somewhere. It has taken this buy side liquidity, then it was consolidating. Okay, because this is the accumulation phase. It came back again into this Friday range. This is the Friday range. That should be our expectation. Now the Tuesday we saw price actually came here, the lower manipulation to this fair value gap, to this fair value. Try to understand, guys. To this fair value gap in Tuesday we saw this. Then our expectation will be it will go toward this buy side liquidity. Why? Because it has already taken the high from there, from the weekly high. It has taken that high, then it came to the setup. This is the setup from daily chart. Okay, if it go little lower, it can go to the consequent encroachment of the breakaway gap. Then our expectation will be the in Tuesday it will go higher. In Thursday it will see the what is that, the continuation of the expansion. Friday it will come back again to the rails. This is all the thing. It all depends on Monday, the Sunday opening. If you see Sunday open has opened over there above that high, what should be your expectation? It will go higher? No, that won't be my expectation. It will actually came lower. How it will trade the opening gap, new week opening gap, that is important. When I will see the opening gap of the new week, if I see very big open, I will expect price will come back again to the consequent encroachment, then it will retrace and take the buy side liquidity. If it failed and it break the consequent encroachment, make that resistance, I will expect it will go toward this fair value gap, the upper fair value gap. When it will come to that fair value gap in Monday, it will go again, it will go back into the Friday range. This is the way you will think. You have to expect the the weekly run, then you have to expect every single day's price action from daily chart, then you have to go to the hourly chart. In when you will go one time frame to another time frame, everything is changed. When you will go from one time frame to another, everything will be changed. Look over here. From hourly chart we can see this is our what is that, the last hourly gap. Okay, that means this is the breakaway gap. What this gap should do, it should hold the price. Okay, remember this is the buy side liquidity, this is the daily fair value gap, this is the water block from daily chart. How beautiful that was. We are thinking okay, price will go above there and it will trade over there. Okay, but if you come to the hourly chart, you can see this is your last fair value gap. If you see now, price, this fair value gap has hold the price, send it back. Where is the sell side liquidity? There is the sell side liquidity. Look at this sell side, very clean sell side liquidity. If this hourly fair value gap has broken, if it has broken, what should be our expectation? It will retrace from the consequent encroachment, then it will leave this area, it will come back again to the hourly fair value gap, then it will trade this high. Okay, this high, remember this is the weekly high. If it has more energy, then it will go to this to this daily fair value gap on also the relatively equal highs. Every time frame, when you go one time frame to another time frame, it will change. How do we know then how to react? That is the thing you are learning. From weekly chart you have to expect something, you have to expect, okay, your expectation has to be in weekly basis. This week where price will go, no, that is not your expectation. Your expectation will be from where it will go from weekly chart, okay, where it can go every week, how it will react. My expectation is it will go lower, that is my expectation. From where it will retrace, when it will go higher, maybe this week price will come here somewhere, maybe to the top of, I mean below of this weekly fair value gap, it will go over there, okay, this week. Then it will come back again somewhere here and it will close. So what should be our weekly bias? It should be by, I mean the high. So our weekly bias is bullish. Now if I see it actually came above this high and it has taken that high, then it went lower, what will be our weekly bias? It will be low. From long term bias we know price will go lower. That is our, that should be our expectation. How, why we get this run? We get this run because it has traded a very strong level, that is weekly volume imbalance, and also very near to the monthly fair value gap consequent encroachment. Very near, it has missed a little bit, but it was very near to the monthly fair value gap consequent encroachment. So that is the reaction of that fair value gap reaction or the consequent encroachment. That is the reaction. That means is not it is going higher and it will take the buy side. That is not the meaning of that. Why that is not the meaning? From dollar index we know dollar will go higher, so it shouldn't go higher as well, it should go lower. That should be your expectation. When you will in daily chart, what do you think? You have to think every specific day. This is Friday candle, so the very next day when Monday, you will see your expectation will be narrative wise, market will come back again to this Friday range. Tuesday we will expect our manipulation, we will see which way we are getting manipulation. If it can take the Monday's low, our expectation will be okay. If I don't see any equal lows below that Monday's low, our expectation will be it will go higher. If we see there is very I mean very clean sell side liquidity below the Monday's low from maybe Friday or Thursday, we will expect that market will take that lows as well from Tuesday, because that is manipulation. If it went above the Monday's high, there is no Monday candle, okay, so there will be some kind of Monday candle. So if it can go above the Monday's candle, and if I see above the Monday's candle there is some kind of very relatively equal highs, so our expectation will be it will take that high as well, because this is manipulation day. When Wednesday will come, we know how to trade the Wednesday narrative, okay. We have to mark this week opening and last week consequent encroachment, I mean the 50%. Then if we see prices is still above the both level, our expectation will be it will go higher, we will get some kind of higher expansion. If it is below the both level, I mean this week opening and last week 50%, those both level, if it is below those both level, then our expectation will be market will go lower and it will expand lower, okay. So that is the way we will think about the narrative. Right now where price is going, I have shown you from the daily chart, it has taken the sell side liquidity, market structure shift, this is the fair value gap, this is the breakaway gap. What price can do, it can just go little bit above, it can make some kind of relative equal highs over here, okay. Then it will come back again here, then it will take that relative equal highs, it will retrace then again, okay. Now how it will happen? In Monday we will see maybe it will go above and then it will, I mean it will come back again to the this candle, this Friday candle, it will come back again this candle. In Tuesday the manipulation we will see lower manipulation, okay, it will come to the low. And then Wednesday and Thursday we will see the expansion, higher expansion toward this buy side liquidity. And then Friday it will come back again to the range. This can happen. What else it can do? It can directly Monday it can come lower, it can trade this, and just let me show you. In Monday we have seen that market actually came here to this fair value gap, okay, and then it went higher and take some kind of relatively equal high here, just here, okay, Friday's high and Monday's high, then it closed over there. So this is Monday's price action. in Tuesday it actually taken this buy side liquidity and also this high, maybe this high it has taken, then it started to go lower. It stopped over there. Wednesday at the London session we see some kind of higher run and then the expansion, okay, maybe this type of expansion, and it went through this breakaway gap. Friday it will come back again to the breakaway gap, consequent encroachment, then we will next week we will do the same thing to the lower run. So there is the way you will read the price in everyday's narrative wise. You have to have a weekly analysis, I mean weekly bias. You have to assume a weekly bias, and then you will see the narrative is working with your expectation or not. If you remember last week, I mean this week, our expectation was market will go lower, okay. So let me actually show you. This is Friday, Thursday, Wednesday, Tuesday, and Monday, okay. So in Monday price was inside the Friday range. Then Tuesday we got the higher manipulation. Remember, this is the higher manipulation. In Tuesday we got the higher manipulation. Now in Wednesday our expectation was we will see the lower, I mean the lower expansion. Instead of that, what we got? We got the higher expansion. Thursday continuation of the expansion. Friday it should come back again into the range. Did it come back? No, it didn't come back. Instead of that, it actually came above and it closed over there. So every week you will get the perfect narrative? No, you will not get that, but you have to act with the price. When you have the narrative little bit, it will support you. You will go to the 15-minute chart. You are now here, okay, in 15-minute chart. Now you know that your narrative is telling you market will come back again to the range, okay. Maybe this is the range high, this is the Thursday high, okay. Just think like that way. So still our narrative, we are wrong, still we are wrong, but we were able to take our entry over there. Remember I showed you the entry over there toward this buy side liquidity. Still our narrative is wrong, our everything is wrong. We are able to take our entry. Why? We know how to utilize the fair value gap, the 15-minute fair value gap. We know that. That's why we are able to take the I mean the entry, okay. Still if we are wrong. Now if your narrative is working and you are getting the price with your expectation, then when you will take entry, you will see, you just take your entry within 1 2 3 4 5 minutes, you are already profitable, okay. If everything is working with your expectation. Now every time it will work with your expectation, no idea. I don't have any idea about that. I don't need to be right every time. Even if I'm wrong with my bias, I can be profitable because I know how to utilize the fair value gap, the breakaway gap, everything. I know how to utilize them. So that is the thing about the, I mean about the bias. Monday is not problem. Disrespect. Sorry, sorry, Julian. You write it down that money is not problem. Okay, so I think it's okay, bro. In 4 months of, okay, I gave you the answer. Why don't you trade forex? Because forex has so many manipulation, and I don't like to be manipulated by the market. In forex market, if you take entry, there is much more chance to be stopped out because it doesn't actually respect the level. The way you will get the price action in futures, it is tick by tick, okay. If your analysis is telling you that market can go below this low, it won't go below that low. But in forex, if your analysis is telling you that market can go below that low, market will actually go lower and you will be stopped out. Okay sir, acha, you will, okay, was it so? So it will be, you will be stopped out. That's why I don't trade forex right now. Nobody who are the best traders all over the world, they don't trade forex. They all trade futures market. But before COVID, all of them were trading forex, okay. So because we all trade the precision, we don't trade the market. If I get the precision or precise price action here, I will trade over here. If I don't get it here, I won't trade over here. If I get the precision or precise market action in Bitcoin, I will go to Bitcoin and I will trade them. If I get that in gold, I will trade over there. So it is all actually, it is the thing of the precise price action. Wherever I will get that, I will trade there. I think you got your answer, brother. bro, how to learn forex trading from ICT. Whatever I'm telling you over here, you can use them to the forex. I mean to the forex. Okay, the thing you have to think differently, and that is your stop loss, only the stop loss, because in forex you will never get the precise price action. That is the difference between future market and forex market. But whatever I'm telling you here, it will work in forex perfectly, and 100% match. You will get 100% match, except the week. You will see the body will close over here, but the week it will come over here. You will be stopped out. That is manipulation. What happened in forex every time. Yes, perfectly clear. Need to draw both the direction and will need to act accordingly. Yeah, that's the thing, brother. You have to think both way, and then you have to act with the price. Okay, your expectation can be anything, but you can't take your entry depending on your expectation. When you will see price is giving you the direction with your expectation, okay, both are matched, then you will take your entry. If you are expecting something, I mean you are expecting price will go higher, okay, now you are seeing price is going lower, so what will you do? You will think this is the retracement, okay, so you will try to take a buy over there, but market is actually going lower. You won't get that if your expectation is very strong and you want to be strict with your expectation, then you will be stopped out so many times, and that is the problem. So you have to understand some level where price should go, and when you will think your analysis, your expectation is wrong, the market expectation, your expectation is wrong. How do I know market will go lower or higher? Until this candle my expectation was market will go lower. Until this candle, see this candle from last day, when I see this single candle from 15-minute chart, I got that my expectation is wrong. Market will not go lower, it will go higher, and it will take the buy side liquidity. Until this candle, even from here I was expecting market will go lower, even from here, because I saw this candle has respected the new week opening gap high. Previously I got the respect, okay, so here I got the respect. I was expecting now is the time to go short. When I see this candle, I admit that I am wrong. Market is going and take the buy side liquidity. That's why I frame the buy over there. You if you already don't forget that. If you don't forget that, I frame my buy trade over there. But before here, anywhere there was a trade, nothing, because my expectation was market should go lower, but it was going higher. It didn't respect this level. It didn't respect this level. That is the first time when I got the respect from the upper level, but it was just after the news. At this candle was at the news, and the very next candle was after the news. So we are not permitted to take entry after the big news or before the big news. So when these two candle happened, after that price again go back above this consequent encroachment. See, it didn't respect this consequent encroachment until this candle. This consequent encroachment was holding the price until this candle. The very next candle it went above. That means this is broken. So price is not going lower. So where is it is going? Maybe it is consolidating over there. I saw it came here. I was expecting it will go lower again, but very next candle when it broke this high. Okay. So this is the time. This is the time for taking entry. Where is your target? This buy side liquidity is your target. If you remember, this is very clean buy side liquidity. This high and this high, there are exactly same high, so I was expecting it will take that buy side liquidity and it will trade the new day opening gap. Okay, so when even if you are in 15-minute chart, you will see some other level of the price action, so there is no connection between the daily chart. Remember the daily chart, there was very nice market structure shift, sell side taken, two fair value gap, everything. Do you remember? So new week opening and new day opening gap will guide us from which level need to buy or sell. Every level will work with constant encroachment high and low, 75% and 25%. I just try to avoid them for this. Okay, I mean if it is from from new week opening gap and opening gap, I try to avoid them. But if it is from weekly chart, or maybe daily chart, or maybe from monthly chart, the 25%, 75% is very important. Upper quadrant and lower quadrant, they're very important. Okay, but here in new week opening gap, uh, or lower time frame gap, fair value gap, I try to avoid them. Okay, so you have to expect the respect from these three levels: a high, middle, and the low. Okay, does it okay bro, because now people know ICT concepts, will they stop working? It will never stop. Okay, George, I'm going to answer you. Julian and George, I will just answer you just after some times. Okay, I need to talk about this one. Sorry. Okay, so Ansh Agarwal, your question is, if everyone start to trade ICT concept, is this going to change? No, it is not going to change. It is not possible to change the change it. It's not possible. Why it is not possible? Because what market actually doing over it? Okay, just think I am the market maker. Okay, this candle, every candle I am printing over here. Every candle I'm printing over here. I am, okay. Just think like that. I am the market maker. Now, why I am printing this candle? Is this candle giving me money? No, it is not giving me the money. Then how do I earn the money from here? When this candle is printing, some of you are actually putting money over here. You are expecting market will go high, so you actually put your money over there. So when market price will come here, you will sell them, so you will be profitable. Okay, now think, everyone here just saw this is actually support. 95% of the people are the retail trader. Okay, so I'll come to your point. So this is the support level. Someone buy here, when price came back again here, they bought it over here again. Market came here, here, it has come here, where they put their stop loss above that high. Don't forget, they put the high. They don't target equal highs. They see equal highs as the resistance level. Okay, so when price came here, market has respected this level 2 times. So what should it do again? Some of you has sold from there. Okay, you sold because you saw market when came that level, it went lower. Whenever the market came here, it went lower. Some of you sold over there. Okay, so someone over here, they are already profitable. They are profitable until here. They have maybe $1,000 profit. Okay, somebody has just sold over there. Where should be their target? Some kind of low. Okay, this low, swing low, you can say this swing low or this swing low. This is their target. Why not this swing low? Because this is support level. They will, when price will come over here, they will put their stop loss above the some kind of swing high that will make over there. So they will put their stop loss over there, and when this break, I mean this support level will break, it will turn into resistance. So they will add more there. Try to understand their concept. Okay, this is their concept. They are not going to stop over there. Now, whoever sold there, if price can come over here, they will be profitable. Whoever buy there, if price can come over here, they will be profitable. Now I am the market maker. Okay, I need to earn money from you. You buy here, I don't want you to be profitable. You sold there, I don't want you to be profitable. I want all the profit. So if I can stop you out, I will be the profitable. You are not going to be a profitable trader. Now what I'm doing, I'm actually going little bit lower, then I will stop you out. Then I will go lower again, make some kind of swing low or swing low type things. I will go higher. All of the people who put their stop loss over there, they will put their stop loss above that, below that swing low. Just think this is the swing low. So they will put their stop loss below that swing low. Why? Because market actually retraced. It has already retraced. Okay. So what I will do, when all the sellers are stopped out, I will go toward that swing low to stop out all the buyers from here. Whoever bought from there, I will stop them out over there. Now buyers are already stopped out, sellers are already stopped out. who is here now? The ICT students are now here. Okay, now we will see this low is the liquidity. We see this as our liquidity. We don't take our buy there, we mark them as our target. We don't, I mean, sell over here to that bias. Your relative equalize. Okay, this is relative equalize, guys. If it is clear or not, just let me show you again. This high and this high, they are the same high, so this is the strong resistance. We are not going to sell over there. What we are going to do, we are actually targeting there. We are going to target that. From where we are going to target, when we see market didn't actually take the sell side liquidity over there, instead of that it has made the relatively equal lows. It went higher, it retraced over there, it went higher, it retraced over there, it went higher again. There is no level that can hold the price until price went over there. Why price go above there? Whoever sold there as their sell side, I mean resistance, whoever sold there, they are stopped out over there. They are already stopped out over there. See over here, this is the thing happened over there. Okay, this is the thing, it happened over there. Now whoever buy here, they will be stopped out like that way. We take our entry over here, we target over there. That is our trade. We don't buy here, we don't sell there, we take the meat into the bone. Now when you will understand the price action, maybe you will see something over here, maybe some kind of fair value gap, market structure shift, whatever the strategy, you will take your buy over there. Your target will be that relatively equal highs. Now everyone, do you think everyone can understand the ICT concept, how to read the price, what is price is doing? ICT is doing this thing from 1992 and now is 2023. How many people did you see who are, I mean, who know everything like ICT knows, who can read the price very perfectly? How many people do you know? How many people do you know that they can read the price perfectly? Very few. Why very few? Because this thing is very hard. People, we are lazy, we don't want to study. What we want, we want to see some videos, 5 minutes shortcut videos, then we would like to go to the chart and try to trade. This is the fact, brother. This is the fact. If you are not patient, if you don't study this, you will never be a profitable trader. You will never understand the ICT concept, never. And this is the hardest thing. In one class, everyone is not number one or number two. Okay, I mean the roll number. If you understand the roll number, the brilliant boy, everyone don't get the A. Okay, A out of, I mean 4 out of 4. Not everyone get that. Whoever study very hard, take notes, don't miss any class, maybe they do some extra work to get a good result, they do the best result at the end of the year in the exam. Rest of the people, what they do, they just, they maybe save, some of them get failed, some of them pass, but they don't get chance in any, I mean good universities. I mean they can't do better. Okay, they can't do the best, but one or two will do the best. Who do the best? Who actually work hard, who study hard. Now if everyone understand the ICT concept, then there will be no market. There will be no market, trust me brother, there will be no market. Why? Because the thing is, if you know how to read the price, then whoever the market maker is, he can't fail you in the trap. He can't do that, because you know what, where market is going. You are reading the price from here, every single candle you are reading. Now you know this is the level where price is going, so you will take your buy here, you will, I mean close your trade over there. How do how do I fail you into the trap? I can't do that. So this, there will be no trading market. Now can everyone, not everyone, can 5% of the people study, I mean will understand this ICT concept out of, I mean, million billion people? No, not even 5% people can understand this. Not even five. What is 5%? 2% people won't understand this. Why? Because we are lazy. Now you can think, brother, you are talking about something that is not true. It is not true. Okay, let's try. I told you not to trade 3 months. How many people listen to me? Very few people. If you don't, I mean, if you don't tell me the truth, that is different thing. But if you are, to be honest, very few people actually stop yourself not to put even this on. Maybe you didn't take that paper trade, but you put this on once, at least once. You did it. Now, how long you will do this? You will never learn this concept. You can't learn that. I don't know how hard I will try, how hard ICT will try. You will never get the price action. That is the psychological thing, brother. Everything is related one with another. Like the weekly bias is related with daily narrative. Daily narrative is related with hourly fair value gap or 15-minute fair value gap. 15-minute fair value gap is related 1 minute time frame. 1 minute time frame is related for framing the trade, and framing the trade is related with the time. What time that frame you are doing? I mean that the trade you would like to take, that time, I mean the frame, okay, framework. What is the time? So everything is related. This is simple thing, brother. If you do the paper trade, if you even put this one when you are learning, you can't learn. You will never learn. Maybe you have watched some video and you are thinking, oh man, I understand everything. But trust me, when you are here in the empty chart, you will understand the real fun of the game. The real fun is over here when there is nothing, and when you have to start from the beginning. Okay, maybe you have already marked some level and you can start to think, okay, I have already marked some level space, I can start from there. No, brother, it's not that much easy. When price will be here, when price will be here, you have no information over there. How do you mark the level over there? You have to mark them from beginning. Now if you don't learn how to mark them from here, how do you mark them over there? Because you didn't learn over here. What did you do? You tried to, I mean, you tried yourself. Can I, did I listen something? I mean, did I learn something? Let's try. Let's take 5-10 paper trade. If I'm profitable, then I'm already, I learned so many things from here. Oh man, this is the thing. I have wasted successfully 7 to 8 months. Successfully, to be honest, brother, I have wasted successfully 7 to 8 months just putting this thing and the paper trade. I learned nothing, not even a single thing. When I stopped that, to be honest, brother, first 7 to 15 days I was thinking it is very easy not to take entry. After 15 to 20 days, I was thinking I know everything about the market. I know everything. Let's take a trade. Paper trade, not live trade, okay? I'm just talking about the paper trade when I was learning. Let's take a paper trade. I controlled myself. This is all truth, brother. I'm just sharing my experience. I know it is not related with the weekly bias things, but it is important because the guy who asked me, I mean, Agarwal, he actually asked me when it will stop working. So that's why I am just relating something with my experience. I stopped myself. I told that okay, I will do this. I will press the button here, but not now. After 15 days. So I have already passed 15 to 20 days. After 15 days, I will press this button. Until then, I won't do that. So when I have writing something to my chart, okay, price should come to this fair value gap. Let me go to the 1 minute chart. So price has actually taken the buy side liquidity over there. Then it has traded this fair value gap. I marked them. I write it down. It should come back to this fair value gap. Now this is your. I write down it. This is my sell side liquidity. It has taken the sell side liquidity. Now it is retracing to the order block. Now it should go below this low. Just for example, it should go below this low. What I was thinking. Okay, this was my mind. Okay, I am not doing this. My mind was telling me, let's just put this on, brother. just this one. You will put your stop loss. Why you are wasting time by writing over here? You can just do this. Let's see it works or not. Okay, let's do this. My mind was telling me this. I stopped myself. I told me I will put that on after 15 days. Sorry, after 10 days. After 10 days, I will start to do this. Then when I will see I'm right, then after 15 days, I will press the button from here. Paper money, okay? I told myself every single day when I was getting right. When I was getting wrong, I didn't even think about them, how to press them. Like from here, maybe I started to read price. I was thinking market will go low. Okay, so I was thinking market will come to this fair value gap, then it will retrace. But I see market is going higher, so I didn't think about them. I see market is going higher, so I think okay, maybe market when it will take this buy side liquidity, after that it will give me the market structure shift. Market will go lower toward this sell side liquidity, but it didn't do that. Instead of that, it went higher. Okay, so every time I'm wrong, I'm getting wrong. I didn't even think about to press them, but when price came here, it started to respect me. Every level I was respecting. Fair value gap entry, then order block entry. It came lower, taken the sell side liquidity. It will go back again to this order block level. It will go lower. When I am getting right every time, my mind was telling me, just put this on, brother. You are not doing live. I mean the paper money. You are not doing the live money. You are nothing. You are doing nothing. Just put this on. I stopped myself because I have wasted successfully 7 months before already. Just doing this type of things, the paper money and these things. I have successfully wasted. Now some of you will tell you that brother, if you don't take entry to the live money, you are wasting your time with the paper money because paper money has no feelings. If you lose, you are not losing actually. If you win, you are not winning, so there is no feelings. Okay, it's perfectly true, brother. It's 100% it is true. You are not learning from paper money. You are not learning from paper money. If you trade the real money, your emotion will be there. Okay, so you will learn from there. No, you will gain fear from there. Fear for what? Fear for losing. You will gain that from there. You will learn that from there. From paper money, what will you learn? You will learn nothing from paper money. Then why do we need paper money? When you learn how to read the price before going the live money, I mean to overcome the fear of the losing trade, you will do the paper trade. That means paper trading is for removing the fear, losing fear. Okay, that is for the paper money, not for learning. These things you have to learn without taking any entry. Now I'm going to the point. That is the reason most of the people are failure in ICT concepts. They can't read the price. They do something that is not reading price action, brother. They just know some kind of YT model, 22 YT model. So they will show you it has taken the buy side liquidity. This is a market structure shift. This is the fair value gap. Market came to that. Okay, there is no fair value gap. Don't be confused. I'm just giving you an example. Okay, so there is a fair value gap. Price came here. Look over there. There is your sell side liquidity. Price take that. So that should be the entry. They will show it to you. They are consistent, profitable. Never. They can't be. The viewers, they're actually good, not good, they're the best. Like I really don't know the name because I don't follow, but there obviously there is someone who is the best, I mean after ICT. But the thing is they learn these things with hard work. They were not lazy. If you ask me, I studied 16 to 17 hours. Can you imagine? I was in front of my chart near about 16 to 17 hours. Now, did I trade over here to the NASDAQ market? Oh no, man. I was in, just let me show you. I was over here, US 500. I learned this concept from this shitty price action. I had no ability to buy the, the thing, what to say, the real data. Okay, I wasn't able to buy the real data, so I had to learn this one. How did I learn? Let me show you them. Just a second, I will show you how did I learn. It was very hard, brother. It was very hard. Lazy people can learn this one, okay? So I have marked, I have opened this chart. It was 10-minute delay. I don't know how much delay is right now. It was 10-minute delay for before, okay? And let me see. So just think, in US 500 you are seeing this price action, okay? When in NASDAQ you will see this type of price action. Now when I saw prices over here, okay? Let me just little bit prices over here. I was analyzing the market from NASDAQ market, okay? I was putting my entries or my, when I was doing the paper trade after learning, I was putting my entry over this market by analyzing that market, because this market you will never get the precise price action. The precise price action is always from this market, the NASDAQ market. I was learning from here. I was confused about this volume imbalance, because there was a volume imbalance, but in NASDAQ market, if you come over here to the NASDAQ market, there is no volume imbalance. But I can't see that at the time because it is 10-minute delayed. It is 10-minute delayed already. So I don't know that there is any volume imbalance or not. Okay. Sometimes I saw there volume imbalance. I took an entry over there. I get stopped out. I was thinking I got stopped out. It should work. It's because I analyzed the market from here. Then later when the price printed over there, I saw there was no, the volume imbalance. That is the way I studied these things. To be honest, brother, I was in front of the chart for near about 16 to 17 hours every fucking single day. Every single day. If you, my mother is not here. Sometimes she actually came to me and asked me, just stop all of this nonsense, because it will never going to give you something. And in that time, do you think what? I never thought that I can talk about these things to anyone. I can't even, I didn't think about that I can talk about this thing to anyone. Like now I'm talking to you guys how to use every level or how to read the price action. I was just thinking, oh man, it never follow my rules. It never follow my lead. Whatever I'm doing here, it is going opposite. Sometimes I'm getting the right price action. Most of the time I'm wrong. Most of the time I'm wrong. And I'm doing hard work. Every single day I'm just spending my time because of this market. Still I'm wrong. How long it will take? Will I ever do that or not? To just teaching other people, oh man, that is just dream. I never think about that. I was just thinking, if I can do this, I'll be happy. I will earn some money from here. I'll be happy. Okay, that's enough. I can earn some money, maybe 2 to 3 5 5,000 dollar or $10,000. Okay, I'll be happy. I got $10,000 because that is huge money in Bangladesh. $10,000 is huge money. Okay, it's near about 1 million. So that is enough for me, man. I will teach someone. Oh man, that was my dream. I can't teach this one because I don't know how it works. And to be honest, brother, you all will understand this. When I was just keep doing this, I was just keep doing this. I was I didn't frustrated that I am getting wrong every time. I didn't get frustrated. Okay, I tried to find why price didn't, what I have missed, what I didn't miss. What I have missed from here. Why price is going higher? What I have missed. Because when I have started this journey, I don't keep this type of level over here, because ICT told, please, whatever I'm doing here, do that to your chart. I forgot to do that. I don't do that at the first time. Okay, when I was learning, this is about the first time. I didn't put them on my chart, so I really didn't know how to use them. Even when I have started to put the new week opening gap, I don't know how to use this opening gap. How to use, from which time frame I have to use, because I used daily 4 hour, 1 hour, 15 minute, 5 minute, 1 minute, sometimes 3 minutes. Very rare, but to be honest, every single day. daily I had opened 3 to 4 5 charts, one after another, daily 4 hour, 1 hour, 15 minute, 5 minute, 1 minute, every time frame over there with US 500. Can you imagine that? What a disaster, man. What a disaster. So I started to cut off. I was thinking, okay, let's try from only 1 minute chart. Can I do this in 1 minute chart? I started to do like that way. I saw in 1 minute chart, I mean, so many up and down, up and down, up and down, and it is not perfect. I go to 5 minute chart. In 5 minute chart, same thing. So 5 minute chart and 1 minute chart, I mean 5, 4, 3, 2, 1. It is only for execution, not for analyzing the trade. I went back to videos. Why I have watched his videos 16 to 17 times, the 22 YT model, because every information was over there. I didn't see, I didn't listen to him. He told that when you will see the price action, you will go from 5 minute to 1 minute chart to frame your trade. I mean, to take your entry. I know I'm going to bore you again. The same lecture, the same sheet from yesterday. I'm just continuing this, but it will help you, brother. Right now, it is not helping you. You will think it is not helping you, but trust me, brother, it will help you. Help you, brother. Trust me. So he told that from 5 minutes to 1 minute is only for execution, not for analyzing. Okay, I got that. When I was wrong for near about 15 days to 20 days. I was wrong. I got that. When I had started to study from 1 minute chart, can I analyze the market from 1 minute chart? 1 minute chart? No, it's not possible. I tried 3 minute chart, I tried 5 minute chart, it's not possible. Then I come 15 minute chart. I was just trying to figure it out. Can I read the price from 15 minute chart? What do you think? I get success at the first time? Oh no, man. Never. From 15 minute chart, it was same thing like 1 minute chart to 5 minute chart. So I started to think, okay, then 15 minute chart is also like the 1 minute 5 minute chart. What should I do? I should go to the daily chart. I skip 1 hour, 4 hour. I went to daily chart. Now when I went, I came here. I was like thinking, okay, from daily chart, how do I know where price will go the very next day? That was my first question. When I have already successfully maybe past 2 to 3 months, okay, something like that. I have already passed them. Okay, so many notes, so many things I written down, but nothing works. Nothing was working. That was the first time when I asked myself, what is my expectation from daily chart? Why daily bias is important? Why ICT is telling daily bias is important? Why it is important? Then the very next candle, how do I know how it will work? Then I try to find his old, old videos. I was just searching the videos from YouTube. After that, from one video he talked about Monday narrative, another video maybe that is near about 1 hour video. In 1 hour time frame, maybe he talked about Tuesday's video for near about how many times? Maybe mm, guys, core content he uploaded at the end of the the 22 model. Okay, don't think he uploaded that very before. So long ago. He didn't do that. He uploaded that after 22 RT model. Okay, so after 2022. So don't think he actually uploaded them very before. So in that time, the core content wasn't over there. Okay, so I got some information about Tuesday from on video. I was just searching every videos of him. How can I know every single day will work? Then I take notes Monday, how it works. I saw Monday work. I have already explained how Monday works. I went before. I tried to see actually it works or not. I saw sometimes it works, sometimes it doesn't work. It made me confused. Why? If the narrative is not working, then how do I know it will work to the lower time frame? Very good question, right? If I am my Friday's narrative, what is this narrative? It should come back again to the range. That should be Friday's narrative, but Friday's narrative is going higher. I was seeing the Monday, it should come back again to the Friday's range. Okay, just example. I don't know what day is it, but just example. So this one should come back again into the range, but it closed over there, so it didn't come back to that range, and it is not working as well. How do I know that it will work? Okay, but I get the information from narrative. I studied them. I write, take notes. I write down them. I went to my chart. I try to find out if one day works every time or not. I find out nothing works 100 times. Nothing, not even a single day's narrative works 100% of the time. I find out 70 to 80% of the time narrative works. 70 to 80% time. Then actually that was the first time when I have started to understand the thing, how it works, how this price action actually works. When I got the information, okay, how it works, so now I have an expectation. So I have to work with my expectation. Try to understand, brother. I'm just going to give you this Mondays. Okay, this is the Monday candle. I will just remove all I will tell you everything with the example, then it will be easier for you as well to understand. So now I have an expectation that Monday will be Friday range bound. It will be Friday range bound, it will be accumulation. That is my expectation. I will work with my expectation. Price will go with my expectation? No, never. Price will never go with my expectation. But if it goes with my expectation, that is the time when I will be right. That will be the time when I will be the right person. When price will go opposite of my expectation, then I will be wrong. So I have to work with me. When I'm wrong, with when I'm right. When I'm wrong, I will never take entry. When I'm right, I will try to take some entry. Okay. So from daily bias, I mean daily chart, I take that narrative. Then I went hourly chart. I will just skip the hourly chart because I have already told you about the hourly chart. I really didn't find anything except the relatively equal highs, or what to say, I mean the relative equal highs or relative equal lows. I mean the buy side liquidity and sell side liquidity. Nothing actually I find out until now. I didn't find out anything important over here. So I actually come 15-minute chart. The reason is ICT told this 15-minute chart is the bellwether for the trader. Why? Because if you give ICT this 15-minute chart, he can trade depending on that 15-minute chart. He doesn't need daily chart, weekly chart, hourly chart, no other chart. He can only take, I mean, he can do the analysis in 15-minute chart, and then he can frame his trade in 1 minute chart or 2 minute chart or 5 minute chart. Okay. I'm just going to finish this very very soon. Just give me some more time. Okay. So I can see so many questions, but I will go through all of them. Okay, so I am trying to give you a direction. How did I get? Okay? So I came 15 minutes chat, and I was trying to find out something at the time. So at 9:30 I saw prices going higher. Maybe just this is Monday, so I will just keep this one, okay, over here. So it went higher. Okay, my expectation is it has taken the buy side liquidity. My expectation is price will be come back again into the range. Now I am waiting for the 15-minute chart to see some kind of reaction. I saw this candle, it actually break through this new day opening gap. It came lower. Now I went to the 1 minute chart. Now I started to find 22 YT model over here. For what? For sell side, because I am working with my expectation now here. My expectation was Monday will be accumulation phase. Though it will go outside of the Friday range, it will come back again into the Friday range. That should be my expectation. I started to work with that expectation. So I saw price is actually going lower, lower, lower. So no entry over there. It went a little bit lower maybe. Then it has taken the sell side liquidity over there, and then it went lower again. Then okay, over here. Then I got my market structure sheet. This is the market structure sheet or 22 YT model, what actually ICT told us. Now this one is working. This one should work. Why this one should work? This is all from the narrative. I am expecting some price action depending on my narrative, my weekly bias, and also, just forget about the new day opening or whatever. Just forget all of them. Now it should work. So there is one fair value gap over there. There is any other fair value? No, there is no other fair value gap. So it should come to this fair value gap, and then it should go higher. Okay. I mean, just higher it will go again or not. I don't care. But now this setup should work. This is the time when I should look for the entry. When it came above over there, I saw this market structure shift, maybe some very beautiful fair value gap. I will take my short over there. No, I won't take my short over there. Why? Because I don't know how long it will go above. I really don't know that. I don't know what 15-minute candle is telling me. It is not telling me anything. But when I have seen it has closed below this low, then I get sure that market will go lower. If I get any setup after that, I will take that entry. So guys, that is the thing. I mean, this is the way, step by step, by working hard work, I learned these things. Now, can you stop taking entry? Can you stop that? It is very hard, to be honest, brother. It is very hard. And that is the thing. We guys are very lazy. We want to spend 1 month, maybe 1 week. After that, we want to start our trading because we have a very limited time. I am going to die tomorrow. So I have to earn money today. Oh man, I don't have any more time. Just teach me something. I will start trading from tomorrow. I will earn money from tomorrow because I am in need of money. I need money. You can't learn like that way. You have to spend time. You have to be patient. Okay. Does it work for BTC? Uh, George, I never trade Bitcoin, so I can't. I really don't know it will work BTC or not. But I don't know. I didn't trade because ICT told that BTC is going to zero. That's why I didn't ever trade BTC. But I did some type of uh, market analysis sometimes in Bitcoin, but never the entry frame. Okay, just hourly time frame market analysis or 15-minute market analysis. I did that. Okay, I think so. Okay. Only thing I don't understand of your analysis, it's that sometimes you mark new day opening gap and new week opening gap of previous week or even months. I though those were useless when time passes. Okay, Julian, I told you that. I mean, I already explained this so many times. I think you missed that. I'm going to reply this again. Okay, this is new week opening gap. Okay, brother, this is the new week opening gap. You have to keep this new week opening gap for 4 weeks. 4 weeks. If you see, it has traded very perfectly. It came this new week opening gap 1 2 3 4 5 6 7 8 9 10 100 times. You will keep this new week opening gap. You will still keep this on your chart until 4 weeks. If you ask me how long I keep them to my chart, I kept them at least 5 weeks, maximum 7 to 8 weeks. I mean for 2 months. If I see price left this place and I know price will not coming here very soon, it has already traded, then I remove them. So this is for new week opening gap. Now new day opening gap. You have to keep the new day opening gap for 1 week. Okay, this is for 1 week. You have to keep them for 1 week. I don't care how many times it has been traded, but you have to keep them for 1 week. Now why I have kept this new day opening gap for so long? Just let me check. Actually, can I go so far or not? Okay, I can go. You can see this new day opening gap was from 17 October, so it's near about 2 to 3 weeks. Okay, so I have kept this new day opening gap for 3 weeks. Why? Because look at over here, when this new day opening gap has created over there, price never come back there. Look, price never come back here. So this new day opening gap didn't trade yet. I kept it. By keeping them, I am not losing anything, so I can keep them. But when it will be traded, I will remove them now because it has already expired. But as price didn't trade, so I will keep them. So for new week opening gap, you have to keep them for 4 weeks, and new day opening gap, you have to keep them for 1 week. Okay? I hope it will clear your doubts, brother. Now the zero, you were laughing. I really don't know why you were laughing. Copy paste. I really don't know what did you copy paste. I'm trying it same, and I also don't know what you were trying to try. Nice. Have a good day. Have a good day. Achoyurehi is my word. So basically, every time an order block is broken, the candle that broke it is the displacement candle. Oh man, this is my world. You have there is nothing related with the water block. I mean, when I told that, I mean the water block is broken or water block type things. Why when I told that, I was just giving you the example over there. So there is nothing related with the displacement and the water block is just kind of confirmation. Okay, it's kind of reading price action things. It is not related with displacement or something. You don't need to relate them. Order block is totally different, brother. Displacement candle is always different thing. My problem is bias narrative, but the moment price moves the opposite of my bias, I immediately know I'm wrong. Sometimes I wonder if I should always take the opposite of my analysis. Okay, Chris, that is another psychological issue. You are actually struggling with your psychological issue. You can recover that. Okay, just think. You are expecting lower run. Okay, just think that you are expecting this today is lower run, it should go lower. Now you see price is going higher, price is going higher, retracement, price is going higher. What you do, you actually think I'm wrong, so you started to take opposite type of entry, and that actually stop you stop you out from learning. Why? You are expecting lower run, you have to stick with that. If you see the higher run with some other confluences, you are far away from that level when you will understand that you are wrong. You are so far from that level. If you are here for learning, then you are actually far away from that level. Okay, it will take little time when you will understand that you are wrong, but at the first stage you can't tell that you are wrong. You have to wait. You have to wait to see that if price give you your run or not. I mean, you are expecting lower run. So is there any setup that is little bit profitable? I mean, that should be profitable with your bias. If it gave it to you later, if you are wrong as well, you don't care. Now, if it doesn't give you any sell setup, you are expecting sell. Okay. So if it doesn't give you a sell setup, instead of that, it is going higher. So this time you are wrong. You are not going to take us buy over there. Market is going higher, just let it go, let it fly. How far it will fly? It will come back, brother. So think like that way. If my expectation is matching, I will go for trade. If it is not matching, it is going out opposite way, I'm waiting. I am not wrong. I am waiting until 4 end of the session. I am waiting until 4. If I see at 4 market closed above here, then I will tell, okay, today I was wrong, today I was wrong. Then I will start to analyze why I am wrong, why market was bullish today. This is the learning phase, brother. Then you will understand something, why it was bullish, why you were wrong, why you were expecting bearish turn, why it went higher. You already got your point. Where what was missing, why you were thinking bearish but it went higher. You will get your point. But when it is going higher, what will you do? You will expect, you will wait. That is the level of the psychology, patience, for being profitable, consistent profitable trader, being disciplined trader. That is the level. When it is going higher, your expectation is market will go lower, but it is going higher, you are waiting. You need that. Okay, I hope it will help you, brother. Never think that you are wrong. Every time you are right. Whatever you are doing here, you are right. Market is wrong. you are not wrong. If you think you are wrong, you will never be right. But if you think market is wrong, he is doing something abnormal. It should do it. Sometimes you will see the thing, or you will listen that I'm telling, oh man, market is not respecting my expectation. He is wrong. I am right, but he is doing something wrong. Why I do that? I actually train my psychology that I am right, market is wrong. He is doing something abnormal. That means it is not the algorithm. There is some other people that are doing this. This is not algorithm, because if it was algorithmic in that time, then it should do that what I was expecting. Because I am always right. I am never wrong. I am always right. If I take a loss, that time market was wrong. I wasn't wrong. I was right. To be honest, but I was right. Every time I am right. Sometimes I take loss because market is wrong. This is the way I train my psychology. I train my brain. You can try, brother, but you have to believe that you are right. This time you are expecting market will go low, but market will go high. You will try to find out why market went higher. Then you will tell yourself, okay, brother, I'm learning, so this time, okay, I'll let it go. I can see that. Okay, next time I will see. Next time I will say how can be you made me wrong. This kind of competition between you and the market. If you think like that way, you will learn. But if you always think about the trade entry, it is going higher, my expectation is going lower. I am going to take an entry now because my expectation, market is going opposite to my expectation. So I should take a buy because I'm wrong. You're not learning. You are not learning. Brother. Just forget about the entry. Entry is the easiest thing. Just forget about that, okay? You will learn, to be honest, brother. It Bitcoin not. It's Bitcoin not. Okay. Bitcoin, brother, I don't know, but ICT told that it will go to zero, so I really don't interested about Bitcoin. How do you mark out new week and new day opening gap? Man, it's a good question, but so many times I will show you. You see this candle? This candle is the closing candle of the Friday. So the closing price from Friday and the opening price from Sunday. That is my new week opening gap. New day opening gap, okay? So just let me show you. This is the new day opening, okay? Over here, look. This is the new day opening gap, okay? This is the closing of at 5 p.m. At 5 p.m. the closing point, at 6 p.m. the opening price, okay? This is the opening price at 6 p.m. This is the closing price at 5 p.m. So there is 1 hour, uh 1 hour no trade, okay? So some kind of market close, 1 hour close, no electronic trading, no what to say, electronical trading or regular trading hour, okay? So that is that hour 5 to 6 is the closing hour. There is no trade. So that is the new day opening gap. I think it's clear, brother. Show is here. Julian, thank you for answering. No problem, Julian. You are my brother. We are brother, right, sir? Also, please share thoughts on Euro USD because some so many forex traders are here. Thank you. I will go to um, Euro USD now. Okay, Tito has simplified everything for you. I'm starting the third time watching all his videos. Even when I fully understand it. Just put in the work. Or Domino, you have good patience, brother. Oh man, seriously, my boring lecture, you are just watching them again and again. Oh, man, it's hard. Mm. But thank you, brother, listening it from you because okay, I just would like to talk something. I'm very sorry, but I would like to take, okay. Actually, to my Twitter, I got until today 35 messages about the private mentorship. Okay, some of you actually asked me to pay something. I mean, hourly or monthly. You will pay me something. I will teach you personally. Okay. To be honest, brother, I will never do that. Never ever I will do that. Okay, I love this thing to do free. The thing is, this is I'm doing this because of my satisfaction, brother. To be honest, brother, I'm very sick now. I catch cold and I have some cough. Also the word I don't know from the nose, the water from the nose. I don't know what to say. It is I'm just using my tissue. So many tissues are over here. I'm doing this. I have a headache. My body is sick. I didn't eat anything today. Nothing. I didn't eat nothing except the water. I came just home. I started to stream. Why I am doing this? Because I really enjoy this to teach you guys, to learn that, to listen that you guys got something from here. I care about that. I told again and again. That is my expectation. Okay. That is why I'm not doing this because of money, and I'm not telling any of you personally. I'm just telling this overall. Okay. So if you listen to me, you will never ask me this type of things again. I mean, you will understand why I'm doing this. I'm doing this because of my satisfaction, not for money or not for anything else. So if you have any question, if you have any doubt, whenever I will do live, you will ask me your question. Brother, why did you tell that? I didn't get that point. Go to that video, go to your YouTube channel, you upload that video that time. Why did you tell that? Explain that. I didn't get that. This kind of private mentorship, right? I'm doing this, and can any of you tell me that I missed his comment? I read everyone's comment. If I see something irrelevant, then maybe I sometimes I skip. But most of the time, if I see some kind of question or anything, I just read your comment, because I try to make clear everything. If you ask me a question, I gave you the answer, but you are not satisfied. Okay, you didn't get it clearly. You ask me again, brother, I didn't get it. You make it more clear. You will order me. You will order me until it is not clear to you. You order me again. Brother, you have to tell me this because you promised. I'm a Muslim. I don't like to break my promise. I always try to keep my promise. Okay. So you will order me. You will ask me again and again until it is not clear. When it will be clear, then it's okay. But something I told you not to ask, like order block or the time frame, I don't trade, or the chart really I don't understand or I don't trade. If you ask question related with them, it will be harder for me. Okay, maybe I will skip them. So if I tell you something you don't understand, you ask me that question again and again. This is the private mentorship. Here I am doing the private mentorship. Here in YouTube, I am doing the private mentorship. The only thing is, you don't need to pay me, and you are learning with other people as well. I mean, when someone else will ask me a question, I'm going to give the answer. You will also make them more clear. I mean, that will be helpful for you as well. Okay, so this is the private mentorship. You can see like that way. What? Just I don't need your money. I will take money from you. I promise I will take money from you when you will earn 200K. That is serious, brother. I'm not joking. If you think I'm joking, that means you don't take me serious, and you have no right to stay here to my live streaming. Just leave it. You don't need to stay over here. I want your respect, because whatever I'm doing here, I should deserve some respect from you. So I'm expecting some respect from you. Please take it seriously. I want you to earn at least 200K plus US dollar. When you will earn that, I will go to you, to your country. You have to offer me some coffees, some food. Maybe you will show me to your beautiful country. I won't spend a single penny from my wallet. Okay, you will spend all the money from your wallet. I will take money. That is my, you know, that is my payment. That will be my payment. Whenever any of you, I have already memorized so many of your name. If any of you ever tweeted me or give me a message, brother, I have earned 200K plus. Now you are allowed to come to my country. I will go over there. I promise you, brother. I will go over there. I will be happy to go over there. I will take some picture with you guys. I mean, I'm kind of I'm not like matured person. Okay, I'm like a boy, maybe 14, 15, 16 years boy. I feel like that way. I love traveling. That is my expectation from all of you guys. I don't know is it clear to you or not. I really don't want your money. So please don't offer me any type of things that is related with money. I don't like it. If I need money, I can just stop all of this bullshit and I can trade. I can earn money. I don't have any problem. I have already earned so much money from this trading. So I don't care about your money. That is my target. That is my goal within 1 year. And actually, to be honest, I didn't get that much, but I was very near within 7 months. So after that, actually, my friend he told me to start giving you something, and YouTube is the best way. So I have previous before YouTube, I actually, if you check my Twitter, you will see I tweeted a lot to my Twitter. I mean, there are so many tweets, but the Twitter, the problem is I can't write down so many things, and the videos it has to be between 2 minutes. So that was very difficult for me. So I thought, okay, I should choose another platform. And then my brother he told me that about the YouTube, so I came to YouTube. Now, if you have any question, I mean, doubt that brother, you are doing this because you would like to earn money from YouTube, you just suggest me any other platform where they don't pay me. Okay, but that will be public. So many people will learn about that. I will go over there and I will teach over there. Okay, so that is my expectation. And yeah, one thing can happen when there will be, I mean, more people. Okay, now it's near about 2,500 people right now. If like just for example, okay, I'm not telling that I will get them, I'm just telling you the fact. Just think there is 20k people, okay, subscribe to my channel, and when I have uploaded a video, I got 20k comment. Now that will be impossible for me to reply everyone's comment, okay, but I will read the comment and I will try to explain them to the live. If I do the live, I will do that. Okay, it is the fact. I hope you guys will understand. I mean the factor. Okay, you will understand. Yeah, I was talking about you, ICT Pro, or not only you and the Darius. I mean the Open Ministry Heart. He was the first one who actually told me, but I ignored him. And then when you forced me, ICT Pro Terapath, you forced me, so I actually put the videos. But before you, the Darius, he is the Open Ministry Heart. He actually told me to choose the YouTube, but I didn't. I never listened to be honest. But when you forced me, I started to upload the video to my YouTube because of your forcing. It is true. It is okay. It is okay. Free connection successful. Okay. I think it is good and the internet is good. Okay. So thanks for your time, bro. No problem. Bikalu, there is Bikalu. There is. I don't know. I think I heard your name first time. Chris G. Did you watch ICT videos while you were learning or another trader on YouTube? I never watch another trader on YouTube. Never ever, please. Just ICT. Just ICT. My brother ICT Pro Trader Path, he's here. He knows that. He watched some other people's video. I mean, other successful students like I forgot the name. He told that I don't know. I don't. So far, I remember it was some others video, but I never did. I mean, see, watch other videos. Even I'm kind of obsessed on ICT. I mean, I can't hear something. If you say something against ICT, I can't hear that. Okay, I can't. What to say? I am obsessed on ICT because I learned this concept from ICT. I'm profitable uh, from the trading because of ICT. After Allah, so I really admire him a lot because he taught us something that is valuable. That's why I never watch some others videos. I mean, I watched 2 to 3 to 5, 4, 5 days. I watched, then I saw that it doesn't work, so I just stopped. free private mentorship, but really worth it. Sure, I will call you in future to my country. Obviously, brother, I will go over there. Obviously, if you call me Sage, I'll go over there. This my world. Yeah, be when I get rich, I'm a treat like coming to America and Eddie Murphy with all the women, man. It is haram in our religion. It's haram. This my world. It's haram. Okay, I don't do any haram thing. So except the women, alcohol, and the gambling, whatever is halal, I will do it. Oh man, that was the comment. No one like T2 in this industry. Oh, Domino, I'm your brother, brother. Just we are brother. So everyone is good in this industry. Everyone is actually sharing so many information. But we are brother. Okay. I want to go with my brothers. That's all. But I'm doing this free for free. No, I'm not doing this for free. I will take money from you, right? When I will be in your country, I will get all the facilities from your country. Don't worry, brother. You have to spend so much money from your wallet. Don't worry about that. The private mentorship is a game changer. I still will congratulate you, bro, because you will have helped a lot of disadvantaged stages in poor countries like mine to the living from trading. God bless. Chris G, the thing is, I'm not actually helping you. You should help you. I am telling this thing again and again. I am not helping any of you. You have to work the thing I'm telling you. If you do that, if you are not lazy, then only then you will be the profitable trader. By watching my video, by wasting time, by watching the live, it is not going to help you. To be honest, brother, just stop watching my live and work with your chart. That is enough. That is enough to be profitable. You don't need to come and check my videos again. If you just watch your chart, your empty chart, this is your empty chart. If you watch your empty chart, you start to read the chart. That is enough for learning. I'm not helping any of you guys. No of no one, no one I'm helping. You should help yourself, brother. You have to understand. If you don't help yourself, nobody will help you. So I'm in here in what to say, the Forex. I mean the Euro USD. Okay. So my brother, yeah, I'm sorry, I'm very late because when I start to talk rubbish, I keep talking. Okay. I'm sorry. So you can see, this is the chart from weekly chart. You see this sell side liquidity, this low and this low. They are relatively equal lows. My target is market will go lower and it will take this sell side liquidity, then this sell side liquidity, and then this weekly fair value gap. It will come over here. Okay, that is my expectation from weekly chart. And over here, I don't want to talk about them. It has actually traded this volume balance or something. I forgot. Right now, where price is over here. So when it has actually came here, it has shifted the market structure. It went higher. This was the last fair value gap. I will mark that fair value gap from weekly chart. Last fair value gap, just last fair value gap. So I'll mark that. Okay. And I can see it has actually rejected from the constant encroachment perfectly. No, it didn't perfectly reject it from there. If you mark this one, it has rejected from the constant. Amma, Amma, Amma. Just a second, guys. I'm just coming back. I'm sorry. I'm sorry. I heard some sound, so I had to check. My father is no more, so I'm the only son. Man, I got afraid. I heard some sound, so I got afraid. After my father's death, I am very weak. This world is not for someone like me. Never. Let it go. So I'm thinking that market will come to the lower part of this fair value gap. I mean, to this fair value gap. Look at this last fair value gap. So I am expecting it will come to the lower part this week. It will go over there, then low. I don't know. That is my expectation. Okay, from the weekly chart, I want to see market is trading to the lower part of this fair value gap. Why this fair value gap? No, why not other fair value gap? You see this run? Is it clear run from here to here? Is it clear run? Obviously, it is clear run. Now, brother, there is another run. Why didn't you choose that run? Okay, let's choose that run. Okay, where is my fair value gap? Oh man, there is no fair value gap. Okay, there is no fair value gap. No worries. Then there is another run that is from here to here. That is another run. Why don't you choose that run? Okay, let's choose the run. So this is my first fair value gap, right? Okay, after this, where is my second fair value gap? I got my second fair value gap. Is this at the opening of the run? No, it is at the end of the run. Is this valuable for you? No, man, it is not valuable for me, because when the run has begun, the fair value gap has to be at the beginning of the run. At the end of the run, that is different. Now look at this run. Okay, look at this run. Where is your first fair value gap? We have this fair value gap, very nice fair value gap. Where is it exactly? At the liquidity level. Is it valid? No, it is not valid. So if it is not valid, when is your second fair value gap? There is a fair value gap? No. There is a fair value gap? No. There is a fair value gap? I think very little fair value gap here. Is it at the beginning of the run? No. At the end of the run. Is it valid? No. So in this leg, I don't have fair value gap. In this leg, I don't have fair value gap. In this leg, I don't have fair value gap. I mean, I have a fair value gap over here, but it is too far. Okay. In this leg, I have a fair value gap. Where is price right now? Price is over here, just very near to that fair value gap. Which fair value gap should I mark? Obviously, this fair value gap. You should mark this one. Now, I am expecting market will come here and it will retrace from there. It like this way. Okay, just let me come here, and then it will take this sell side liquidity. Look at this sell side liquidity, very clean. Then this weekly fair value gap. Okay, so that is my expectation. It will happen, I don't know. I don't know. That is my expectation, and I told you how to work with your expectation. Now if you come to the daily chart, this fair value gap is from weekly chart. Okay, this is the fair value gap from weekly chart. Now look at this run. Anybody has any confusion about this run? Look at this run, how beautiful this run is. So this run, where is your first fair value gap? Can anybody show me the first fair value gap? I want to see the first fair value gap. Just let me remove this one. Look at this one. Oh man, I got a fair value gap. Is it confusing? I don't think so. What is that? That is breakaway gap. Why? Why that is breakaway gap? There should be some reason, brother. It has taken the buy side liquidity, give you the market structure shift. Where is your first fair value gap? There is a first fair value gap. What is that? That is your breakaway gap. What is your second fair value gap? Where is your second fair value gap? There is my second fair value gap. Did I made it confused? Okay, I make always confused. So if price come to this fair value gap, where it should, do you have any related, I mean the equal loss, I mean the sell side liquidity below the market? Obviously I have. Where is it? There is it. This low and the all of this low, they are relatively equal low. Did it take I mean the price taken that sell side liquidity? Yeah, it has taken that sell side liquidity. If you remember it or not, I don't know, but I have shown you this. When price actually took take the sell side liquidity, I was in forex market. Then I moved my sell side liquidity over there, because it has made another sell side liquidity, very relatively equal loss. So I have made that as my sell side liquidity. Okay,
So we have already rejected from the second fair value gap. Okay, now should we keep it to our chart? I will not keep it to my chart. Why? Because it has done its job already. Now I will keep the breakaway gap to my chart. Anybody has any confusion about this breakaway gap? Why it is valid breakaway gap? It has taken the buy side liquidity, given you market structure shift. This is the first fair value gap. Look at this run. This is the first fair value gap. This is the second fair value gap. It should be your entry point. That means you have to think like that way. Will you take your entry over here? No. You will take your entry from the 1 minute chart, but from here you are actually reading the price. So your stop loss will be just above the breakaway gap. Now I will put my stop loss over here. Why? Because this is a very small breakaway gap. A wick can easily go through this breakaway gap and come back again, but the body will tell you the truth. It will tell you the story. The body can't close above the constant encroachment. That is the thing of the breakaway gap. This is the rule for the breakaway gap. Always remember, most of the time you will see price will never come back to this breakaway gap. Never. It will come to the upper fair value gap, this fair value gap, and it will take the sell side liquidity. Okay, now when it has done its job over there, price is going higher again. Where it can go, this is the last fair value gap that should stop the price. Okay, so what is my expectation? It will come here, maybe it will come to the upper level. Nobody can close above this breakaway gap. Now this breakaway gap actually holding the price. Okay, here I was expecting price will never close above the constant encroachment. The body will never close above the constant encroachment, but this time I want to see nobody will close above the breakaway gap. Nobody will close above the breakaway gap high, because this time breakaway gap is going to hold the price. If I see that it hold the price, then it send back again here below the breakaway gap from 15-minute chart. Try to understand, brother. Whatever I'm telling you here, it's all about from 15-minute chart. Okay, I'm just showing it from daily chart, but I'm talking about the 15-minute candle. If I see it break the breakaway gap low again when it will break the breakaway gap low, I will go to 1 minute chart. I will go to the 1 minute chart and I will try to frame some kind of buy side liquidity taken, market structure shift, fair value gap, and if there is some clean sell side liquidity, I will take that sell. If this breakaway gap failed to hold the price, if this breakaway gap failed to hold the price, what will be my expectation? From 15-minute chart, it will come back again to the constant encroachment, rejection from the constant encroachment, maybe 1 time, 2 times, 3 times, I don't know how many times. Then it will reject the break, the gap area. Okay, it will reject from there. It will come back again to the upper part of the breakaway gap, and it will take some kind of buy side liquidity. Okay, this type of thing. So here from 15-minute chart, when I will see market is here, I will go to 1 minute chart and I will try to take it into over there depending on the breakaway gap. Okay, from 15-minute chart, if I see, if I am in 15-minute chart, just think this is from 15-minute chart, and if 15-minute chart I saw some kind of sell side liquidity has taken, market structure shift to fair value gap, upper upper fair value gap is the same thing, lower fair value gap will be the breakaway gap, then I will go to 1 minute chart and I will take my entry to the upper fair value gap. This is the way you will frame your trade. Very simple thing, brother. It is very confusing maybe first time, but when you will keep listening them, I will keep showing you the same thing again and again, you will understand. Okay, I will go to the 15 minutes, 1 hour chart. You can see how it has traded. It has taken the, okay, look over here. I have marked all the breakaway gap over there actually. From what time frame? Let me just take. Okay, I can see there are some breakaway gaps, so let's see. When I did, I really don't remember. I've done this. So that was the breakaway gap, and price actually came to the breakaway gap. It went higher, just taken the sell side liquidity. It market structure shift. This is the last breakaway gap. The last fair value gap. It should hold the price. It should hold the price. Look at this breakaway gap. It went higher, take the buy side liquidity. Okay, right? It has taken the buy side liquidity. Now if price can come back again to this breakaway gap, how do I think? I will think it will, nobody can close below the breakaway gap low. Okay, that should be my thinking. Now if there is another, I'm sorry brother, I actually missed something. I mean, I make something related, I mean, what to say, I really don't know. I will just uh retalk. Okay, over here, this is the breakaway gap. There is no other gap. Look over here, there is no two gap. So this breakaway gap you can't expect like this one. In this gap I have another gap over here, just above this breakaway gap, another gap over here. Okay, so price should come to this gap and then go higher, but if it break that gap, it can go below the constant encroachment of this gap. Okay, I'm very sorry brother, because I mixed this gap with this gap. I'm sorry for that. Now look over here, when price has taken the sell side liquidity, give you the market structure shift, this is the only gap, there is no other gap. So this is the only gap. If you see the only gap, you will expect price will hold, I mean this breakaway gap will hold the price and send it back to the up, I mean upper level or somewhere, if your narrative is telling you it will go higher. Now if it is uh, the future market, just think this is the future market. I saw this, it has broken the constant encroachment. What would I think? I will think it will come back again to this breakaway gap, it will come back again for this sell side liquidity. As it is forex, this is expected, this little violation is expected, because this is forex market. Forex market doesn't give you the precision. I don't know it is getting clear or it is getting complicated. That is the reason I don't trade forex. Instead of the forex I trade future market, because in future market I can just tell you by seeing a one candle where market is going to do, I mean what market is going to do. I can do that by watching a single candle. Okay. Now look over here, let me remove this one. Look at this run. Okay, just let me remove this one. Now it has taken the sell side liquidity. I am showing you the thing, it happened again and again. You don't believe me, that is your fault, that is not my fault. So it has taken the sell side liquidity. Okay, just think your narrative is bullish or something, and it has given you a very nice market structure shift. Anybody has any complaint about this market structure shift? I don't have any complaint. Now this is your market structure shift, I mean sorry, sell side liquidity taken. This is your market structure shift. Where is your two fair value gap? Can anybody tell me where is your, this fair value gap is valid? Is it above at the level of the liquidity or above the level? I can see it is above the level, it is not at the level or below the level. So this fair value gap is valid. Is it valid? Tell me, tell me, tell me, tell me, tell me, tell me. This should be your breakaway gap. Is there any other fair value gap above the breakaway gap? Let me see if there is any other fair value gap or not. Come on, I have another fair value gap. Where should be your entry? When it will tap to the upper fair value gap, then you will take your entry over there. Where will be your stop loss? Just below the constant encroachment of the breakaway gap. If I see this type of a small fair value gap, I put it below the fair value gap. If this breakaway gap would like that one, okay, that one is very big, then I would put my stop loss just below the constant encroachment, because most of the time you will see market don't actually break this type of big breakaway gaps constant encroachment, but this type of a small breakaway gap, it can easily just go through the breakaway gap. A week can go, most of the time it can. Now is there any equal highs that is more obvious buy side liquidity? Let me check, and I have how beautifully these both highs. So that should be your entry. Did I tell it to you or I didn't tell you? It's up to you, brother. Did I show it to you or not? So that is the thing. And here in over here right now, this is the 15-minute chart, and I'm expecting that market will go to this fair value gap first. After that, I will expect the lower run. Now, how it will go? Let me go to the daily chart one more time. How it will go over there? Tomorrow is Monday. I will expect price will be inside this range. Okay? This Friday range. This is the Friday candle. So price will be inside the Friday range. Then I will expect some kind of manipulation in uh, Tuesday, then Wednesday expansion, Thursday continuation of the expansion, Friday it will come back again in intervals. Is it clear? I know I have how long I'm doing this in how long it is? I mean, I have got only 39 like I'm gonna cry. I'm gonna cry. How long I am doing this live? Can anyone tell me how long I'm doing this live? Because I don't know how to see this. Just let me know, okay? And technology. Yeah, but brother, I was talking about you. How much did I miss, bro? The message. Oh man, I didn't. I don't know how. What I was just coming home. I just come home and I started live streaming. Okay, so I had no chance to message or something. I tweeted and I started live. I was very busy. I started late. Okay. Prepare is game changer. Okay, I have read this comment. Which video do you recommend to a struggling trader or who is not profitable like me? Chris G, I have already told you the thing you have to learn. Okay, now how do you learn them? It's up to you, brother. I told you how to learn this concept. Weekly bash, narrative, then 15 minutes. I showed you something about 15 minutes that I'm not telling that learn them. It's up to you. But if you know how to use the breakaway gap, it's up to you. Okay, so really depend on you. Uh, Everyone who is learning from my friends should thank me. Yeah, everyone will thank you, brother. I'm thanking you on behalf of everyone. What do you mean with fair value gap being at a liquidity level? The thing is, let me show. You see, this is the liquidity, right? Sell side liquidity. So this run has taken the sell side liquidity. If this fair value gap would be here, it is at the sell side liquidity level or the below the liquidity level. Then I will skip that gap. I mean that won't be my first fair value gap. Okay, just let me show you little bit. Yes, just too far. I don't know. Is there any fair value gap? Okay, this is a okay, there is a very small fair value gap. A very small fair value. Look, this is just below the liquidity level. Okay, this is the sell side liquidity. This run has actually taken the sell side liquidity. This gap is just below the sell side liquidity or at the sell side liquidity level. This gap is not valid as my first fair value gap, okay, because my first fair value gap is my breakaway gap and the second fair value gap is my entry gap for the first time. Okay, brother. Yeah, the first fair value gap is a breakaway gap. Yeah, that is the thing, brother. So I think it's done for today. I am tired so much. I'm so much tired. I don't know how much I bored you. I'm extremely sorry, but if you guys get anything from here, I'll be glad. I'll be satisfied. That will be my winning side. I want to win this trade, brother. This trade I want to win. Okay, so just let me know if you have any question or not. If you have any question, I will answer them. Otherwise, I will just close my session for today. Okay, I will disturb you again tomorrow. I will try to disturb, actually, not a promise, but tomorrow 8 a.m. New York local time, I'll try to disturb you again. Let me know if you have any question or not. Okay, after that I will just close my session. And if any of you here without giving me the like, please give me the like before I'm just leaving the session. Please give me the like. Okay? Any of you have any question, I will answer you. I will close my session. Nobody has no question? Okay, I think nobody has any question. So thanks for watching and best of luck guys for your learning. I will talk to you again maybe another day. Until then, cheers.